Welcome to India Market Open. We're back after a midweek break to a pretty rough global market setup. Nasdaq down over 500 points. Big earnings day. Infosys reports today. RIL does tomorrow. And markets will react to Asian Paints and LTI Mindtree. So it's an action-packed Thursday morning.
Yes, it is. And it almost seems as if the world has now decided that there is a president-elect in the US because his comments always were exciting, but now they are moving things.
Yep.
Right? You know what's upsetting is Biden getting COVID now. I mean, that's the last thing you want.
I think you're very kind to have these sympathies, but I don't know politically if anyone else really is. But yeah, action-packed day, also an expiry day ahead of the budget. So I think that's going to be an important one for the Nifty expiry. Just one more story very quickly, apart from the laundry list that Samina talked about, which is going to move the markets, which I thought was interesting. And it also shows the impact of industry and corporate India. So yesterday, the Karnataka government decided that they want to have up to 100% reservation for Kannadigas, so locals in the private sector. There was a maelstrom that followed. So from NASSCOM to all industry bodies, the who's who of corporate India came out and said that this is just not done. You're going to impact your state. They've had to put it on freeze for now. They're saying we'll look at it later. But it's interesting, Niraj and Samina, because every state keeps coming up with this every few years. Because there are not enough of those high-quality jobs. So they want to bring in that local factor. It's a political thing. And industry has managed to push back and said, hey, let us do our job. Don't bring all of this in the private sector, at least. Yeah. So I thought that was interesting.
No, and it's such an important point because I think if we look at, and if it's a case study of sorts, and if we learn from other countries who've done that, it's always the start to the end. Case in point, the Middle East in Oman, where they've actually done this, right? So 40% of your employees have to be local Omanis. The economy from its pride is now down to its feet only because of the fact that they've focused so much of securing jobs for their people.
You're going to have to increase the pie instead of, making more slices out of it. But no, nevertheless, yes, Trump is a big story overnight, definitely. And that's moving Asian markets also to that extent. But let's just take you through the run-through to what's happening and why the Nasdaq has been hurting. The Nasdaq, in its worst performance since 2022, down nearly 600 points, 3%. And part of it is also because of rotation out of tech and the whole NVIDIA story, chips story. That's why you're also seeing that kind of hit. NVIDIA was down nearly 7%. The bet is that if there is a rate cut, and the likelihood seems to be increasing with the kind of commentary coming in September, you will have other sectors which also boom. In that sense, the whole tech mega cap semiconductor chip play was a counter to an otherwise flailing situation in the US economy. So, all right, just take a look at how the rest of the US indices did. And the Dow was not half bad, the S&P 500, all right, but the Dow was still up in the green because not too much of an exposure to tech stocks, right? So Dow future is also okay. That also proves the point that this was a tech kind of a hit that we saw last night in the US markets. Now, on the other end of things, while your semiconductor and chip makers are suffering, you are seeing other sectors also doing fairly okay. So in the US right now, the focus is on rate cuts, the focus is on non-tech sectors, and maybe not just the large caps as well. So if you see the other indices, they have done fairly okay. Let's just pull up what's happening with bond yields, and pretty much flat as that anticipation continues. So your US 10-year was at 4.17 on the hopes of that rate cut, and a very important statement by a Fed governor, Christopher Waller, which I just want to highlight for a second, because remember, it's all about when that rate cut will happen, and is the tone and tenor changing? The big man, Powell himself, has given that hope. Now he says that we don't have to wait for a 2% to cut rates, but Fed Governor Christopher Waller says that we are closer to the time of rate cuts, and that would give some kind of a boost. It's also lifted spirits for crude traders, and so crude was up. Brent up about 0.5%. One of the other reasons was that US inventories were low. And Asia, of course, hit with a couple of fears. One is that there might be more restrictions of imports into the US. That's definitely what a Trump would do. His statements also making those moves. So you've seen that impact as far as Asian markets are concerned. But let's pull up the implied open for India, because remember, India marches to our own drum, and we are maybe going to open in the red, but mildly. That's a flat kind of an opening, if at all. In terms of fund flows, for the third consecutive session, you had buying coming in from FIIs. So that's that figure there, 1272 crores. DIs were selling 530 crores. So the setup, if I were to say globally, is good. But there are going to be a lot of local factors that the market's going to look for. Niraj, I reckon an expiry before the budget would be the big one. And definitely it's all about the results.
Yeah, I mean, the pre-ex, this thing today, and then the month-end expiry on the 25th as well. I mean, it's all this talk of how we want to reduce the number of expiries on every day as well. I think it'll be interesting. But yeah, I mean, it's a fair point, because if we see what happened in Tuesday's session as well, we closed about 24,600, yes, but a very defensive bent to the market. Reliance cracked about 1.5%, and that was masked only by the fact that IT, FMCG, and life insurance showed up. Otherwise, we would have been looking at a pullback in trade. So that is the first thing to keep in mind. And that's the chart, right? Reliance really pulled back. And while the point contributors don't show an ICICI Bank, but really it was Infi, HUL, Tata Consumer, etc., which all kind of masked this disappointment of Reliance Industries. And the structure has been very narrow. We closed about 24,600, but hardly any gains in Tuesday's session as well. So a bit of a defensive bent to the market. Can we build on from there? Remains to be seen. I think after the mixed commentary from TCS versus HCL Tech, we've seen some strong commentary, at least from LTIMindtree, and we'll talk about that. And therefore, what Infosys says today post numbers also becomes important, because if Infosys can echo what TCS and to an extent LTIMindtree have said, then it kind of opens up a pathway for IT to do well. And God knows we need IT to do well, because banking isn't quite doing well. And therefore, you need a heavyweight sector to come in and shore up the market, because we are no longer at 21,500. We're at 24,600. And consumption doesn't seem to be ruling the roost, because if Asian Paints is anything to go by, it's an interesting time. Lower wedding dates, election season issues. Q1 will be impacted. No, I'm just saying consumption at large. We could see an impact on Q1.
I don't know if Asian Paints is a broader consumption story, or it's more
consumption is such a wide basket that from Bikaji Foods
but look
to
at Titan, for example.
Galaxy Surfkins also becomes consumption in some ways.
Yeah, but if you
right?
just look at broad consumption, Titan, lower wedding dates, etc., not the best of numbers. Asian Paints, and it was expected these wedding dates. We'll talk about it, I know, but I'm just saying consumption is getting hit by multiple things, including election plus lower wedding dates, etc.
And the heat wave, that's the other excuse. It's only work for Hudson Agro, we saw, but apart from that, everyone's...
I would say between discretionary, high-end and basic staples, maybe we'll have to make a bit of a distinction, because all of your Dabur, HUL, ITCs of the world are all talking about rural recovery. So are you going to see a sort of pivot there within consumption?
Hopefully we do that.
Yeah, could be another talking point.
But I think Niraj alluded to the fact that LTI reported a very strong quarter. And in fact, if you even compare it to TCS has said that there are green shoots. LTIMindtree shown that there are green shoots. So they've actually grown in various verticals. So we'll talk about that in a minute. But a few things to add to what Niraj mentioned. You also said IMF that sounds extremely confident about India. So I'll quickly highlight what the IMF has said on global growth and what they've also said on India very specifically. They've kept the 2024 global GDP growth forecast unchanged at 3.2%. They've lowered their US GDP 2024 outlook by a marginal 10 basis points. They've raised the Euro GDP outlook, but what stood out is for what they've done on China and on India. They've raised 2024 GDP outlook for China by 40 bips higher. They've also raised India's GDP outlook by 20 bips to 7%. So largely in line, of course, slightly less optimistic than the regulator. But nevertheless, I think that is, again, a good thing coming our way. Talking about how you need IT to play the role or take lead from here on. We did see that with earnings of LTIMindtree. You have 37 other companies that will be reporting in today's session. So by the end of the week, you'll have 36% of the Nifty 50 having reported their earnings. So it becomes a very significant week for more than one reasons. But in terms of a few technicals that stood out for me is that 24,200 now has become a very important level of support. All through the month of June and halfway through July, it was 24,000, which was seeing maximum amount of put interest. This clearly is changed with the range moving slightly higher on the index. But the fact remains, with what we've seen over the last few days, there are signs of a weakening momentum at higher levels. So the gains, the record highs, are not coming in on very large volumes, nor are they coming with big gains in that sense. Bank Nifty all through June was the star performer. From the start of July, this is going through a time correction. What I mean is that it's done nothing over the last 2 weeks. The trading range remains between 52,000 on the downside and 53,000 on the upside. But till 52,800 doesn't get taken out, don't expect very much on Bank Nifty. So that's going through a time-wise correction. No surprises there in terms of what we are seeing. What could change the trend is earnings that would come in from some of the PSU and private sector banks. That could help Bank Nifty higher. But to take you through the stocks on our radar this morning, it's got to be Asian Paints. And I'll start with Asian Paints because let's get the bad news out of the way before we talk about the good news in that sense. Asian Paints profits and revenue have declined for a second straight quarter. And I think that is what a key standout is. Their net profit was down a massive 25% to come in at 1,170 crores. Business was hit by a challenging demand environment impacted by a severe heat wave and general elections. Their revenues were down 2%, EBITDA was down 20%. And remember last quarter on the 9th of May when they reported earnings, the stock was down 5%. Management at that time had said that going into the next quarter, they are working with a double-digit growth in revenue. Now, you've not got a double digit, you haven't got a single digit, you've got a degrowth. So I'm not sure how they did not anticipate elections, how they did not anticipate salary hikes, employment costs, or advertising costs for that matter. International business was also impacted by forex crisis in Egypt and Asia, is what they've indicated. The only business that's done okay for Asian Paints is their home decor business. Not as significant in the bigger piece, but nevertheless has grown by 10%. Management has said that inflation, raw material inflation is a problem. So if you see raw materials continue to move up, they will undertake further price hikes. Double-digit growth, once again, the management says, is expected going ahead. Now, whether we take that at face value is anybody's guess, given that they said so even in the last quarter gone by. So it looks like it could be a tough quarter. There's also Birla Opus. The stock trades at 53 times, so it's also very lofty valuations. And with the way the industry is now moving to, it seems like the dynamics have changed. It's far more competitive, and it seems like clients or consumers are preferring low-cost paints. So premiumization, that wave, at least for this sector, doesn't stand anymore. And except, I think, one brokerage, which is UBS, everybody is a neutral or sell on Asian Paints. But please jump in.
My only thing is, and we'll talk about the numbers in detail. Do you reckon, not in large enough volumes maybe, but premium clients are also moving to alternates like laminates and wallpapers?
Wallpaper, yeah.
So, I mean, at least anecdotally, I see that a lot.
Yeah.
Fuss-free, very quick new technologies, that could also be a hit. But yeah, having said that, I think the real test, and Asian Paints is one of those pedigree companies. So one bad quarter or two bad quarters doesn't change the fact that they have a distribution network which is class apart, unbeaten.
But I think you'd have to adjust your expectations now, right?
Yeah.
When you look at Asian Paints.
Having said that, I think the festive season is a real test. This whole Birla Opus versus Asian Paints fight and where they settle, I don't know. I think the real test is going to be in the festive season, and that's where we'll actually see
also
it.
JSW Paints, because they are making a significant presence, felt to though not spoken about as much. But just some data from up, because we'll talk about it in detail, but so therefore we'll save it for that. But just some data from a trade perspective. Last 3 days, 27% build up or addition to OI. On the short side.
Oh, on Asian Paints.
Yeah, on Asian Paints, significant short build-up seen in the last 3 days, but not as much price action, because the last 7 days, I think the stock has fallen only 1.37%.
And it was up on the Tuesday.
So last 7 days, 1.37% lower, but massive short addition. On the 3,000 call, 800 lots added, And at $540 million, the open interest is at a 1-year high. So there is massive short build-up out there in Asian Paints. We'll get those graphics up on the screen. And therefore, the interesting piece only is from a trade perspective that it'll start off gap down, But when it starts off gap down, will some of these shorts which are out there 1-year high, will they come to cover? And could that bring out a bit of a revival immediately in the first 5 minutes?
You might be right, because on the 9th of May, when they reported earnings, the stock fell 5%. On the 10th of May, the stock recovered very sharply. At 2,000 rupees at 50 times, all brokerages, the consensus was, they've reduced their target. The targets were 2,000 rupees. The stock is at 2,900 today. So, of course, it looks tough in the next few quarters, but the long-term story for Asian Paints remains intact. My only point here is that for an incumbent to change strategy is much harder than a new entrant. When you're a new entrant, it's a whole lot easier to focus on the markets you want. You've been there, you've seen it. But again, it is Asian Paints, so you're not going to.
I don't know. I don't know. I mean, we don't know. Like management, we don't know whether. I mean, they haven't attributed it to competition. They've attributed it to lower wedding days.
But they've said that so employee cost, they've said, has gone up because they've increased more salespeople for rural distribution.
So, but then that would peter out, right? That would then over the next few quarters. That's not something that's going to happen every quarter.
But that cost will remain, right?
Cost will remain.
But
so
then,
there may not be a further. There's definitely not going to be a downside. But nevertheless, we'll discuss that in detail.
With somebody else.
I'll quickly get to LTI because I think this one is a standout after being criticized extensively post the merger for the fact that the recovery was not happening, business was struggling. LTI Mindtree is indicating that there is a very evident turnaround in place. And those numbers are exceptional. After having a very rough FY24, it seems like they've got their act together. Revenues were higher by 2%, EBITDA has improved, profits have improved, margins have improved, and most verticals have seen an expansion. So just to take you through that, they've seen a broad-based growth. High-tech, BFSI, manufacturing have reported growth of 2.8 and 2% quarterly. The only industry or vertical that's seen a degrown is healthcare and consumer business. In BFSI, clients are also seeing a scale up to high priority programs. And when we had spoken at DC, which is Debashis Chatterjee a few months ago, he had very clearly said that their focus was Gen I and they were actually looking to sell that, not making use of it for themselves, but also using LTI Mindtree as a case study to pitch it to some of their high profile clients. And that's what's happened. They've hired more people. They've not lost any clients. Their book seems to be growing. Number of client additions looks good. And the commentary is optimistic. I wonder why the management, so of course we will talk to the management at some point in the day, but for now it's going to be the stock of the morning. Asian Paints on the sell side, LTI Mindtree on the buy side. And Trump is great for Indian tech companies, so it could be more than one reason why the stock hopefully sees a good beginning, except for what happened on NASDAQ. Yeah. I know. No,
I was just talking about the Bernstein note on LTI Mindtree, and they are looking at a downside on the stock. They're not that excited about it, so just wanted to put that out there. They're saying they've maintained market performance, target price at 4,800. Margin miss is what's seeming to bother them. So they're saying, margin miss on estimates, a modest TCV makes growth recovery difficult in FY25. Deal wins have started to flow in revenue. Clients have started to scale up high priority, but they are still looking at a difficult year ahead. So
I'm really surprised.
Yeah.
But 15.3 estimate. They've delivered 15. They've said they will lead. All of this will lead to sustained growth momentum in Q2 and continue beyond. What more do you want from an IT company at the current stage?
We should ask Bernstein.
But we should.
I wanted to put that out there that they absolutely do have a contrarian view. So even as exciting as the numbers seem on the face of it,
good to put the contrarian.
Viewers should know both views.
Yeah, and the stock has done about 10% in 1 month, so that could be the reason. But it seems.
Miss.
I just hope Bernstein isn't right, because I think they've honestly worked really hard to turn around the corner, right? I mean, you've got to give them credit. You saw what TCS did. You saw what the other IT companies have done, and we've not had a significant up move, or there has been conversations, but nobody's actually seen action on ground. And I think LTI Mindtree stood out on that front. Very quickly on L&T Finance, of course, the management will be talking shortly, but they've done decently well. Their total income is up 12%, and their net profits, actually not decently, they've done quite well, is up about 30% at 685 crores versus 530. 31. So that's the 3 top earnings that I have on my list.
Yeah. So a lot more, but I'll just very quickly go through the first lot. KEC International, that stock moves a lot when there are order wins. I don't know if it always makes sense or not, because it's one of those companies which have varied verticals and kinds of businesses, but new orders of about 1,100 crores, including orders for transmission and distribution projects in India and overseas. Order intake has exceeded 6,000 crore rupees. I just want to pull up the 1 week and 1 month chart for KEC International, because this is one of those fairly volatile stocks and has been underperforming in the last month or so. Just Dial numbers are out. Revenue, and on the face of it, seem okay. Revenues up 3.8%, EBITDA up 14.2%. EBITDA margins have grown fairly decently at 28.7% versus 26.1%. Net profits up 22% as well. So this is I would say, a positive set of numbers, and you could see that impact coming in on the Just Dial stock today. Elecon Engineering is one which unfortunately has had a tough quarter. Revenues are down 10%. For Q1, EBITDA is down 16% to 72 crores, and margins have also dipped about 2% odd in this quarter. Net profit also down 9.5%. So you might see a bit of a hit there. There are, of course, more with some announcements, but I'll come back to that.
Yeah, no, actually not too many on my end. There is one, we spoke about Hindustan Zinc, I presume.
No.
If we haven't, then just want to mention that, because there is this automatic belief that dividends will come in, and now they have a provision to do that because NCLT has approved capital reorganization, and that approval has come in for the company. So it's a conversion of general reserve of close to 10,300 and some number, but 10,400 crores to be precise, or thereabouts, to retained earnings is possible. And once this happens in the retained earnings, the company has the ability to give it out as dividend. And in Hindustan Zinc's case, as I said, people will believe that dividends will come in. The math suggests that it could be a dividend of about 25 rupees per share. And therefore, you expect some bit of excitement in Hindustan Zinc today. Very likely it could happen. And the other one is Vascon Engineers. The stock was very excited in Friday's session, in Tuesday's session, excuse me. But they've sold a subsidiary for 157 crores. And the current market cap, 1822 crores, about 9%. The stock has already rallied 12%. May not do more is the point I want to try and make. That the stock has already rallied on the presumption of this announcement, I presume. So therefore, watch out for that one. And then multiple brokerage notes. I know we have a guest waiting, but multiple brokerage notes, guys. There is a Nomiron Bajaj Auto, which is very positive because of the Bajaj Auto commentary. There's a Motilal Oswal on Zentech, which is a very positive note as well. The target price is 1700 odd. So some of these brokerage notes could be in focus.
And then you have sector-specific mutual funds in defense who actually close taking allocations because they don't see value and opportunity. And then you have a very ambitious brokerage note on Zentech. So it's
one brokerage note I want to add, just because I thought this was interesting, was Jefferies initiating coverage on these gold finance companies. Just very quickly. On Muthoot Finance, they see an upside of 21%, target price of 2220. They've hit a buy on Manappuram as well, with a target price of 270 plus 23%. We'll get, Harsh will come in and give us more details on that, but I thought that was just interesting to mark in the first leg. But let's get on Asian Paints. Kaustubh Pavaskar, Deputy VP of Fundamental Research at Sharekhan, is with us this morning. Kaustubh, very good morning. Hope you can hear me. So we've been talking a lot about Asian Paints here. You must have heard some of that conversation. Let's just start with your first take. Is it as bad as it looks at first glance?
Yeah, good morning. Results are weak. They are below what we and Street were anticipating for the quarter. But volume growth of 7% was largely in line with our expectation. And this quarter was anticipated that April, May, because of the unavailability of laborers and heat wave, it will have impact on the sales volume. And so volume growth in April, May was really impacted. June, they have seen a good recovery. And that resulted into 7% volume growth. Management is quite confident that they would see a recovery in the volume growth to double digit in quarters ahead, and this is mainly on account of expected recovery in the rural demand and also they are seeing good, stocking up which is happening at a retail side prior to the festive season. So they are anticipating good festive season. So both these factors will lead to volume growth recovering back to double digit in the quarters ahead. EBITDA margins were weak, lower than what we were anticipating, but they were in line with what management has guided of around 18 to 20%. So we believe that EBITDA margins will continue to remain in the lower end of the band because there are two reasons. One, they are strengthening their on-field, distribution. Second, they are continuously spending on media and promotional activities. So that will continue to, put a stress on the margins in the near term. But obviously, it will benefit company over the long run. So we believe that numbers are weak, but we should expect good recovery in the quarters ahead.
Now, I don't mean to look at the glass as half empty, but let's do a quarter back. Last quarter, the management said double-digit growth in the first quarter of FY25. They were sounding very optimistic. At that time, too, revenues were down, margins were under pressure. Analysts believe it could be because of Birla Opus. Now, if we look at this quarter, they've not just not grown double-digit, they've actually degrown, and the reasons are election and heat wave is what the management has said. Now, I know heat wave was unexpected, but elections was always on the radar. So how seriously should we be taking the management when they talk about a significant recovery? Because on ground looks very different or doesn't look as promising or convincing as the commentary.
Normally what happens prior to the election, there is a lot of shipment which happens of the labor to their hometown. And that really impact, the painting activities, because April and May is normally, one of these 2 months are important, in terms of painting activities. And those 2 important months were hit by the election and the heat wave. They have seen a good recovery in the month of June. And I guess if monsoons, though they were, initially weak, they have picked up, and we are expecting, we are seeing gradual, recovery in the monsoon as well. So if that continues, I think July, August are important in terms of rains, in terms of agriculture production. We have seen Kharif crop, this thing is also high. It is in double digits sowing. So if monsoons are good, I think productions will be good. That will augur well for the rural economy. We should expect, some kind of incentives coming up in the upcoming budget. So if all these factors, turn up, I think it will be positive for, overall consumer demand. Economy range is something which there is a, the lower end of the portfolio is getting impacted because of the, weak rural demand. But most of the FMCG companies are, stating that they are seeing, green shoots in the rural market. And if that happens, I think we should expect volume growth to come back on track for the FMCG companies, and that goes for even Asian Paints. So we should expect double-digit volume growth at the in the quarters ahead. But overall revenue growth will be in single digit because the volume value gap will continue to be there at around 5%. So focus for Asian Paints going ahead is to improve the mix, which will help them to narrow down that volume value gap.
Kaustubh, you're not concerned that at 50 times it looked expensive last quarter, and at 53 times today, it may be the valuation may be posing a little bit of a risk to the upside on the stock, or you feel like you're comfortable with how it is?
See, if you look into last 5 years, average multiple for Asian Paints, it is around 60 times. So if we look, and last 3 years average is little higher than that. The stock has underperformed the indices for last 1 year. It has been underperforming. There were reasons behind it because one of the top players was entering the market. Also the rural economy was not conducive for having a good volume. But despite that, Asian Paints volume growth was quite good. And the only thing what we will see is that margin pressure will continue. Volume growth will recover, but we believe that FY26 the margin should gradually improve. So considering the better outlook and the valuations which is at discount to its average multiple, I think we should start looking accumulation in the stock over the period of time, because I think it will maintain that leadership position in the paint business. They have their strategies in place. They are enhancing their capacities. They are building up their on-field strength. Okay, so I think all this should help them to see good recovery in the quarters ahead. And once the performance start improving, I think that will again have impact on their valuation as well.
Okay, Kaustubh, very quickly then, between Asian Paints and some of the others, is Asian Paints a preferred buy, or would you have something else within that paints category?
Yeah, Asian Paints is a preferred buy because it is a market leader, and I think it will continue to hold that position. And the valuations at this point looks good, and I believe that today there might be further correction in the stock price because of the weak performance. So any correction should be considered as a good accumulation point because Asian Paints is a leader, and I think it will maintain that leadership positioning considering the fact that whatever strategies it have to improve its outlook ahead.
Just one last very quick question, Kaustubh, and this is, I think, the key point that viewers want to know. What to do with Asian Paints today? If you see a crack, which seems likely on opening, should you wait and accumulate, hold, buy, sell? What is the very clear call on Asian Paints?
So I just mentioned that if there is a further correction, I think we should start accumulation. So we have a buy rating on the stock. We believe that risk reward is slowly turning favorable for Asian Paints. So I think from here one should look to buy, and it is a portfolio stock. So we have a buy rating with a price target of 3,385.
Right. Well, Kaustubh, great talking to you. It's good to hear that you maintain a buy call on the stock. It'd be interesting. I think any sort of cut today will get bought into. And as Niraj had indicated, on the F&O side of data as well, there was heavy short built up that the stock has seen with an addition of open interest at a 1 lakh record. Or rather 1 year record. So that's what we have on Asian Paints. The stock has done well. Let's not forget that the last couple of months have actually been good for the counter. A quick check on implied Nifty before I think Niraj may have a few other stocks to highlight. But implied Nifty is flat as a pancake. But I mean, could be a morning when where there'll be a bit of a tug of war. In terms of the index
Maybe
performance.
Take this with both hands considering what Asia is doing, part one. By the way, on Asian Paints, we'll have a management interview coming up at 12. So you want to log in for that. And just a couple of other stocks, I think, just before we wrap it up. Oil exploration companies, oil prices have gone up. So that is one thing. But HOEC's got a block discovery. And that stock was up and active last 1 week. But there could be some more in store. So Hindustan Oil Exploration is certainly a stock that discovered a new gas in Dirok field, and therefore at 236, after having rallied so much, there could well be some more upsides for HOEC, so watch out for this one.
It's up 11% in the last 5 days.
We should add ONGC to that as well, because the company has commenced production from a coal bed methane block in Bokaro, Jharkhand. Initial production at 1.7 lakh units will be ramped up to 3 lakh units by end of FY25. So just these two.
So we have those. We have earnings. You have counters like Hathway Cables, Just Dial, Alok Industries. You've got telecom numbers where Vodafone has lost subscribers. All that and more. But as usual, at 8:30, we will try and get back to you on the F&O segment with Agam. So stay tuned.
welcome back. This is India Market Open. We're taking stock of how things have fared as far as the futures and options segment is concerned. And we start off with how Tuesday came through. Well, it was a flattish day of trade, at least as far as the Nifty is concerned. We had marginal gains, a new life high, although the speed at which we're making new life highs are now slowing a bit, just tad bit. Along with that, we really haven't seen too much change in open interest as far as the July futures go. For the Bank Nifty, even when the index itself were closed marginally in the red, we saw a lot more unwinding coming through. Of course, it was the Fin Nifty as well as the Bank Nifty weekly options expiry. Speaking of which, we move in and talk about today's weekly options expiry for the Nifty. Now, even as the Nifty nudged forward slightly, well, we saw a little bit more writing around the 25,000 call, and that in fact is the one with the maximum open interest. On the lower end, we're keeping an eye on 24,600 and 500, where puts where we have a little bit more accumulation as far as your OI in puts is concerned. Those strikes could perhaps be a little bit more important in today's day of trade. Now, in terms of stocks, at least as far as those counters which saw an increase in open interest in their respective futures, all of them saw a lot of weakness. So L&T Tech, Vedanta, Concord, LTF, as well as Dalmia Bharat, all of them saw shorts. Perhaps Hindustan Zinc will be one of those counters which will be in focus today. After, of course, we've had the verdict from the NCLT Jaipur. And, of course, amongst stocks we saw unwinding, we saw short covering in IGL, Petronet LNG, Bandhan Bank, as well as Max Financial. Keep an eye on that one. We didn't see too much change in the respective underlying spot prices as far as those stocks which saw unwinding is concerned. That said, the question really is that well, we're heading into an interesting week. Naturally, this upcoming Tuesday, we will also have the union budget being presented by the finance minister, keeping perhaps that event in mind, moving forward and looking beyond in terms of your earnings season as well. How do you play the current markets? Well, we have with us Rahul Ghosh of Hedge.in, who's joining us on the show right now. Rahul, good morning. Thanks so much for joining in. Let's once again start off with your assessment of the markets at the moment.
Good morning, and thank you for having me. From last week, from last Thursday when we met, nothing has changed significantly. We were around 150 point lower range over there. I think we were around 24,500, and today we are about 150 points above that. Last week, I mentioned that going long from a risk-reward point of view at this perspective does not make sense. Yes, you can plan some option strategies where if you go long and the long trade does not work out, you don't tend to lose much money. Last week, we opened the 51,000 and 50,500 August series put spread in Bank Nifty, which we continue to hold for the August month. But yes, from a risk to reward perspective, the downside is much more and the upside is far less. Our proprietary indicators give us that the upside could top out by another 400, 450 points maximum to the upside.
What about the Nifty, Rahul? What are you doing with that particular index right now?
So two things we need to keep in mind with respect to the Nifty index. One is that vols could slightly increase Friday, today and Monday. But after Tuesday, which is the budget event, like you likely said, there could be a decrease in volatility. Also, we need to keep in mind that budgets have had wild swings in the past, and we need to account for these wild swings while planning a strategy. The current move that Nifty is moving slowly and steadily upward has to be kept intact, but we need to be fully protected in case Nifty has a sharp downturn movement. So very, very tight our hedges have to be when coming up with a strategy before such a big event. And that's exactly what we've done. What we've done is we formed a modified collar of sorts where we bought Nifty futures. Now, when you go in and buy futures before an event, there's always a risk. Therefore, to hedge that risk, we've bought the 24,500 PE of August. And once you bought this PE, your futures upside risk gets hedged. But the problem with buying the put is that you're paying a very heavy cost for buying the put. To offset this heavy cost for buying the put, what we're doing is we're selling the August 1st expiry 24,600 call. I repeat, the 24,500 put of August end expiry, but we are selling the 24,600 call of 1st August expiry. Three things happens by doing this. Firstly, if somebody is not comfortable with futures, they can always take synthetic futures. That's a small tip that can be given. Three things, like I said, could happen with respect to this strategy. Number one, if Nifty stays sideways, then the 1st August expiry will erode much, much faster than the end August expiry. No prizes for guessing that. Number two, if Nifty goes up, we have room on the upside because we are getting about 340 points credit by selling the 24,600 call. So it does not cause us any problems on the upside. The only point is we might have to wait till the 1st of August to capitalize on that upward move. And the third point, if Nifty goes down, then too your sold call because of the faster erosion takes care of the debit of the put. In all three cases, this strategy happens to be protected, safe, and yes, can help us make some alpha as well.
Well, so there you have it. We just made a very quick minor correction as far as the Nifty 24,600 call is concerned. But these, I believe, are the correct graphics that are on your screen. Rahul, anything that you need to keep in mind when it comes to potential adjustments, or do you just let the strategy run through at least until the 1st of August?
Yeah, I would suggest that you let the strategy run at least till the last 2-3 days of this expiry or the 1st of August, depending upon what kind of reward you're looking for. The capital involved in the trade would be definitely sub 50,000 rupees. So even 2,500 proves to be a good return on capital. But the only adjustment in this, keeping it very simple, is that post the 1st August expiry, you keep rolling the sold call of 24,600 to subsequent weeks. That's the only adjustment. And towards the downside, when you can do this adjustment is when Nifty breaks 24,000 on the downside. You buy back the 24,600 call and maybe sell the 8th August or the 15th August or so on and so forth. Future weeks in August calls, so get in a little bit more credit, I beg your pardon.
All right. Okay. Well, on that note, Rahul, taking a moment to thank you for joining us and taking us through, well, your strategy here that we can deploy as far as the Nifty is concerned. Of course, we'll be keeping an eye on that. And as Rahul has already mentioned, that there's an expectation of increased volatility in the run-up to the budget, which has about less than a few sessions left now. So we will be keeping an eye on those factors. With that, it's back to you.
That's, of course, the F&O picture. And remember, a lot of F&O analysts haven't been betting on a strategy on the index itself because it does look lofty and stretched. And there's a little bit of nervousness that now is very obvious at higher levels on the index. So there is a loss of momentum, and it's an earnings heavy week, right? So you've got Reliance Industries tomorrow, you've got Infosys today, you've got Havells, you've got Polycab, you've got Tata Tech, to name a few. Well, Nirav Asher now joins in from Natin Manhalal to talk to us about the markets. Nirav, before I go into the markets, let's talk about Asian Paints. What did you make of those earnings? Are you disappointed? If we do see a gap up on the stock, would you buy it or avoid it? Gap down, pardon me.
Yeah, good morning. Thank you for having me on your show. As far as Asian Paints is concerned, it's been a disappointing quarter. And I think in the previous quarter, that is Q4, already the company had indicated that these smarter economy products have been doing quite well. At the same time, the luxury segment was also doing well, but the premium products were growing at a slower clip. So I think there were already signs that the product mix is shifting slowly. And even in this particular quarter, the company has said that there's been a degrowth in revenues, but there has been a sharp erosion in the margins. So I think while the company says this is on account of the heat wave and the general elections, etc., the fact of the matter is that the decorative segment has seen a volume growth of 7%, but there has been a value decline over there. So I think it's something which is quite serious, and I think it is likely to dent the valuations not only of Asian Paints, but also likely to have a spillover effect on the other paint companies as well. And apart from this, we are going to see the advertising intensity go up, media intensity is likely to go up, competitive intensity will go up. with the entry of the new players. If we see in this particular quarter, the waterproofing segment, the distempers, etc., the low value, the low margin products have done quite well. So I think the real culprit is the shift in the product mix, which has impacted. And going forward, also, it's going to be a challenging time for Asian Paints.
Well, okay. So fundamentally, Nirav doesn't like it. Shrikant, it'll start off lower today. Let's start off with Asian Paints. Good morning. What do you do here?
Good morning, Niraj. Good morning, everyone. I think for Asian Paints, I'm of the view that technically it is not showing any major weakness. It was, in fact, showing that the stock can move towards 3,200 levels, 250 levels. But now, after these disappointing numbers, we may see some lower opening. But again, I think this should again get converted into buying opportunity for traders, because it has formed a solid basis around 2850, 2900 levels. So if we see the stock is dropping to 2850 or 2900 levels, there again, we should look for taking some long position. I'm of the view that it is like going to perform eventually.
That's the call coming on Asian Paints. Nirav, let's talk about... Actually, before I go to LTI Mindtree, a quick word on the Nifty. If you want to come in, fundamentally, it seems like now the run-up is looking a little lofty. We're going into the budget in a few days. Would you tactically consider strategy on the index, or you would avoid it?
I think at this level, there is no point in taking any specific buying view on Nifty with a very short-term view, because it is in the range, it is consolidating. But yes, if we see any deeper correction because of any reason, deeper I am to say not more than 200, 250 points. So if we see the Nifty is dropping to 24,400 or 350, then there we can take a confident long bet. But otherwise, it is better to be more and more stock specific. On the higher side, 24,665, 670 going to act as resistance, which was its previous highest level. Above that, the chances of hitting 24,750 or 800 would turn bright. But I think it is better if we see the market is dropping to important levels like 24,400.
Well, so now let me take that cue from Samina's previous question and focus on the IT space. LTI Mindtree is in focus today. We know the numbers were slightly better, but Rucha has also looked at the management commentary that is coming in. She joins in right now with what stood out there. Rucha.
Thanks, Niraj. Good morning. So pretty great commentary is what we saw from the management yesterday. It mentioned that the growth was led by resumption of paused projects. Now, this was the case with many big IT companies where they were seeing deal cancellation and deal pauses. So this is what the company mentioned yesterday. And to highlight, even TCS mentioned that they are seeing very few deal cancellations. So this is a positive for the IT sector broadly. Now, two problems that we saw over the last few quarters is deal wins getting converted into revenue. Now, talking about this, LTI Mindtree management mentioned that they have seen ramping up of deals, and this is being reflecting in the revenue. So this problem seems to be solving gradually. Next problem was clients had been very tight on the budget because of the uncertain macro environment. Now here is again another positive for the IT sector, because the management mentioned that clients are deploying their savings into the transformational projects, and just the high priority deals and cost optimization is the momentum which will continue. So this is another positive for the sector. Now talking about AI, it also mentioned that clients are deploying budget and for the foundational investments in AI, and they will gradually see the pickup in AI going forward. Now talking about margins has been a little bit of concern for LTI Mindtree, because the company guided that it will target to come at pre-merger levels of 18%, which currently is at 15%. Now the company has reported very great utilization levels. So margin lever from utilization levers is a little low, and the company was a little skeptical about how to improve margin, and it largely mentioned that growth would largely drive margin. So talking about demand environment, pretty healthy demand environment over here, but margins is what is to be watched out for, because the company also mentioned about giving wage hikes in the third quarter going ahead.
So you know, the commentary is definitely positive for LTI Mindtree. The numbers look good on the face of it. I think just one note from Bernstein, which has a bit of a contrarian view. But let's get a view in from Shrikant Chauhan first on LTI Mindtree on the charts. Shrikant, very good morning. Tamanna here. How do you like LTI Mindtree? Is it looking exciting for you today?
Yeah, good morning, Tamanna. Yeah, I think the technically chart is showing a lot of strength. In fact, it was like performing on a day-to-day basis. On a weekly basis also, the stock is forming some reversal activity sort of formation. And based on its technical formation, I'm of the view that it is going to continue its pullback more because the stock was around some 6,500 levels. From there, all the way it fell to 4,500 levels, and now it is again reversing back to those losses. So I'm of the view that the stock is eventually heading for the levels of 6,000, 6,200. At this level, it's a buy with a positional view, and we can keep stop loss somewhere close to 5,400 levels. So it's a buy at current levels and more on dips.
What about you? Are you bullish on the numbers? Would you say in relative terms, LTI Mindtree has actually walked the talk, unlike some of its other peers?
Yeah, so I think the numbers have been quite encouraging, but I think that's been the case with the larger players as well. I think it's probably the turnaround time as far as the IT sector is concerned. From what we have read about TCS, from the commentary about HCL, and now about LTI Mindtree, I think the sentiment is slowly improving. Till now, there was a focus on cost optimization initiatives. Discretionary spending was virtually put on hold, but I think things should improve from here.
Should improve from here, and that's what it looks like. The stock has also done well over the last few days. We'll be connecting with the management midday today to get an understanding of what are the key standouts in the quarter and what growth is looking like going ahead. Shrikant, very quickly, you want to take us through your top trades this morning?
Yeah, I think based on the overall relative outperformance, I am of the view that PSU banks should do well in today's date because there we are seeing some momentum. State Bank of India is leading to the show, and based on its technical formation, the next level to watch out for would be 900 to 920. It's a buy at current levels, and if there is any correction, then again we can look for adding some position with a stop loss close to 860. So State Bank looks good. We also like, along with this, Biocon, because all these pharma companies, they are forming some reversal activity, and most of these stocks are going up with good delivery-based volume. At this level, Biocon looks a very decent candidate to buy with a stop loss close to 344, 343, and we are expecting stock to move towards its previous high of 370.75. So Biocon as well as State Bank should be on the watch list.
Biocon and SPI, those are the two trading calls coming in from our technical guest. But we'll take a break. But before we take that break, I caught up with the FICCI president, Anisha, yesterday with regard to his budget expectations and the mood in the industry just ahead of the budget. Listen to what he said while we take that break.
Exports is going to be one of the most important areas for us, because for us to be able to reach our Viksit Bharat goals, manufacturing has to increase multifold. And for that, while there can be some short-term measures, we would really focus on long-term competitiveness. And let's take the auto industry as an example. How can we take measures to make India the hub for manufacturing automobiles? Attract all global players to come here and set up manufacturing in India. But can we make manufacturing in India competitive, make it easy to do business, that really creates a situation where exports grow multifold, not just a small increase based on some short-term incentives.
welcome back. You're watching India Market Open. Just about two and a half minutes left to go for the first pre-open rates to tick. And remember, it's going to be an interesting day. The Nifty implied open further into the red. Not alarming by any stretch of the imagination. But yes, definitely looking like we're going to open with a bit of red, at least this morning. But what are the stocks that you need to watch out for trade today? Varsha is joining us with more details and some of those stocks that should be on your radar. Yes, Varsha, good morning.
Good morning, Tamanna. So yes, few stocks which should be on your radar. First, starting with KEC International, wherein they've received new orders of rupees 1100 crore for transmission and distribution projects in India and overseas, and order intake has exceeded 6,000 crores. Then we have Tata Power, wherein they had an AGM, wherein they announced that company plans to invest rupees 20,000 crore capex in FY25. This is over and above rupees 12,000 crore investment in FY24. Large part of this will be towards accelerating company's renewable energy portfolio and transmission and distribution business. Also, company targets 15 gigawatt clean energy portfolio in 5 years from existing 9 gigawatt, both from existing and ongoing projects. Then we have Indian Oil, wherein they've raised 2,500 crore via NCDs. Funds will be used for refinancing existing debt and capex. Then we have Ashok Leyland, wherein their company's arm Hinduja Tech Science agreement to acquire Tecosim Group. Now this acquisition will broaden Hinduja's presence in European and international markets. Also, shares are acquired at an enterprise value of around 190 crore. Then lastly, we have Elcon Engineering, where they came up with Q1 FY25 results, wherein revenue was down 10%. Now revenue degrowth was led by transmission equipment segment, which was down 7% year on year, and revenue from gear division impacted an order inflow. Also there was this weakness due to general elections in Q1 FY25. Company expects demand uptick going forward to recoup revenue loss, and material handling equipment segment revenue was up 9% year on year as companies focus on product supply after sales pays off. Also, order intake was up 9.7% at rupees 545 crore.
Well, we'll watch out for a clutch of these smaller names. You know, one of the names, by the way, the pre-open session about to kick in. It'll be interesting to see if we follow Asia or are we resilient the way we were in Tuesday's session. So that's something to keep a keen eye out for. Now, watch out. I think IT might do its bit today. Remember, in Tuesday's session as well, Reliance had this big downtake, but oil upstream might actually recover a bit today because oil prices have essentially moved up because US stockpile reasons, and therefore the likes of Reliance, ONGC and the others might be interesting names in the session today. Shrikant, actually come in because these rates will change. Reliance won't be down 4.5%. Shrikant, what do you do with some of the oil upstream companies, particularly two stocks, ONGC, which had a big day sometime earlier, and Hindustan Oil Exploration, which has had a fantastic run in the last 5 days?
Yeah, I think like both these companies are doing really well, Niraj. If we go through with the very first ONGC, then it has broken the highest high, I mean to say the all-time high of 314, 315, which it has made in the year 2014. So it's a big event for the company, and I think based on the formation, I'm expecting stock to move further from current levels. At least we could see the levels of 350, 55 in next few years based on its technical formation. So that's the overall view on ONGC. It's a buy if there is any correction during the day close to 315, 316 level. But specifically for Hindustan Oil Exploration, then there also it has spent a lot of time. In fact, it was into trending up move, but it was consolidating, and now I think it is on the verge of crossing this particular breakout level. So if we consider the formation, I think eventually the stock is moving for at least 300, 320 sort of level. So there is like possibility of making at least $100 from current levels. But at this level, it's a buy if there is a positional view. If there is a very short-term view, then wait for some correction because currently the stock has rallied to its extreme level. Supports are somewhere close to 225, 220 levels.
Nirav, you've got two consumer companies coming in with earnings tomorrow, Havells and Polycab. Both are important. They'll give us a sense of the industry setup as well. And Polycab, I believe the earnings aren't expected to be very strong. How do you view both of these? What are your expectations going into earnings of both these companies?
Yeah, so today we have the results of Polycab and Havells. And I think as far as Polycab is concerned, it's been through a painful transition. And I think the exports continue to do very well. The wires and cables business has been doing quite well. So we expect Polycab to do quite well in terms of performance. And I think for Havells, it's going to be slightly challenging considering the fact that the base effect is quite high. So I think Polycab should be better as compared to Havells. But overall, there will be a reflection of some slowdown on account of the general elections, etc. That will definitely reflect in the domestic markets.
All right, so that's let's talk about the two big movers today, Asian Paints and LTIMindtree. I mean, these are the two stocks that we've been chattering about since this morning. Asian Paints down about 6% now in the pre-open session. That will likely settle, but that's directionally, I think, what you're going to see as far as Asian Paints is concerned. LTIMindtree started off fairly strong, but those very, very initial gains now coming off. The numbers are good on the face of it. Brokerages are not fully convinced. I'm just going to quickly pull up the chart of what brokerages are saying and their target prices. And most of them, maybe because of the run-up, possibly because of the run-up we've already seen, most of them are not that bullish on LTIMindtree. Look at that entire chart over there, all of them seeing a downside. So LTIMindtree, one to watch out for. Asian Paints is the other one. I just want to quickly pull up Just Dial for you and see what it's doing pre-open. Decent numbers. That's one that was on our radar as well. Just Dial 6.5% up. KC International also doing fairly well. Elecon Engineering, on the other hand, really seeing some pain points. Shrikant, any of these stocks, I mean, you have a view on Just Dial?
Yeah, for Just Dial, I think there also we are seeing some gradual activity. It is into uptrend, but currently it is consolidating, and I'm of the view that it is going to trade within the range of 1100 and 1000 on the downside. So if we see the stock is dropping to 1000 or let's say 980, then there we should look for taking some long position. It is like going to spend some more time within the range. I think a positional trader, it's a buy, but for short-term traders, I think it is better to stay away.
Right, for the short term, stay away. That is Just Dial. You've also got, actually, Niro, you want to come in on telecom? Vodafone has lost 9 lakh subscribers in the month of May. Jio has added about 3 lakh customers in the month of May. Vodafone, of course, was in focus on Friday as well. How do you feel? What do you feel about Vodafone? Do you feel like it still looks like a good contra bet to hold in your portfolio?
It's slightly difficult, and we would stay away from Vodafone. But there has been some talk about some relief on the AGR dues, etc. So I think that was one of the main reasons why the stock has been rallying, and now this loss of subscribers. But I think would stay away from Vodafone at least. And I think we have been betting on Indus Towers. So I think we see a lot of potential over there. We have been recommending this stock on a very regular basis to our clients.
Okay. Well, the other interesting one is Z, and of course, just before I get too harsh, just pull up Z Entertainment, because that is likely starting off lower. Much as there was this whole talk of 2,000 crores coming in to fundraise, and so many people constructive on that, the stock has collapsed, or not collapsed really, but corrected from 160, 161 all the way to 149 or 150 as the pre-open rate suggests. So, nope, not a great mover out there, Z Entertainment. But on the flip side, there are some other stocks which are possibly likely to do well. At least brokerages believe they could do well. Harsh Johnson with a view on a couple of very interesting brokerage notes, Harsh.
Well, absolutely. Defense is the space to look out for, Niraj, and we have Zentek within the defense space, where Motilal has actually initiated coverage. a 30+% upside is what they see on this one. Company is a niche player in the defense simulator based training market as well as in the counter drone market, and these two are set to grow quite sharply. The addressable market for both simulators and counter drones are combined 26,000 crore, 14,000 crore for simulator, 12,000 crore for counter drones, and this is over a period of 5 years. So the opportunity size is very large, only 1,400 crore in terms of their book size, and therefore just the opportunity size versus book size, maybe a 20x difference between the two over 5 years. So very, very strong runway in terms of what the next 5 years holds, and the management on our channel had also spoken about that runway, very strong one. What really stands out for Motilal, for this company, it's a strong margin and high ROCE business. So it's an asset-light model. It has a very strong vendor base in terms of where simulators is concerned, and the backward integration in terms of counter drone solutions is very strong as well. And therefore, it's got one is very solid runway, but two is deep moats. At least that's what it seems. Motilal seems to be indicating. Order book, as I did mention, 1,400 crore, expected to grow at a 37% CAGR over the next 3 years, all the way to FY27. Revenue, therefore, to go up 63% over the next 3 years. EBITDA 57% compounding over the next 3 years, and PAT 56%. Motilal values the stock at 40 times June 26. Likely, given the kind of numbers, looks like a very strong runway. Quickly switching focus to gold financiers. Now, Jefferies has initiated coverage there. Both Muthoot as well as Manappuram, very positive, 20% plus in terms of upside where they see for both Muthoot and Manappuram. Now, in terms of gold price, the tailwind is strong. Diversification by some of these gold financiers likely to lift loan growth in any case. There are multiple support factors for gold prices as well. Slight NIM moderation expected, low asset quality risk and higher returns. 16 to 18% ROEs is what they're expecting on this business, as well as almost 18% plus on the EPS compounding side as well over the next 2 years. So Jefferies positive, 20% plus upside.
All right, those are some of the brokerage notes and radar. At least those two gold funding stocks are definitely running. Those gold NBFCs, both Muthoot and Manappuram. Nirav, Ashar, quick view on both of these.
Yeah, we are very positive on both the gold financing companies, and the gold prices have been on an upward trajectory. The ROEs, the return on equity, return on capital employed, etc., is quite strong. So I think we like both these companies at the current levels.
Okay, let's look at what else is moving today. Eicher having a bit of a tough day as well after their bike launch, and at least in the pre-open session, doesn't seem to be doing too well. Jefferies note out on Eicher as well. Sorry, a Nomura note on Eicher out as well today with a target price of 4,119. So looking at a bit of a downside over there. They do not expect much improvement in their overall growth. Shrikant, any views on Eicher or even a Bajaj Auto for that matter?
Yeah, I think for both these auto companies, we are of the view that they are going to consolidate, because the overall performance, I'm going to say, the rally that we saw in last few months, I think after this rally, we are seeing some consolidation sort of activity in both the companies. But yes, in that, Eicher is doing well. It is very close to its previous highest level. If we see the stock is starts sustaining above the levels of 5,000, because it is going to act as psychological resistance for it. So above 5,000, we are expecting stock to move towards 5,300 or 5,400. So if we compare both these stocks, then relatively Eicher is much better. For Bajaj, I think, yes, it is going to consolidate furthermore, because the stock has already rallied to its extreme level. Until the stock is not crossing 10,000, I think we could see the stock spending its time between 9,400 and 10,000 levels. So it's a buy, but if there is any correction, close to 9,400 levels.
In fact, it's not looking too bad for Asian Paints this morning. It's still a gap down, a big gap down, but not as bad as the 9% that the initial pre-ticks were indicating. To 3.5% low is what you have. on this one. Shrikant, a couple of actually, you know what, why don't we get into budget trades? Between now and budget, which is two trading days, is there any stocks that you're looking to buy? All those themes like railway, fertilizer, defense are now on the sell side. Have you spotted anything that could make a good trade between today and Tuesday morning?
I think, we need to focus on fertilizer companies as well as on few oil and gas companies, because there we are seeing a lot of momentum, and whenever there is a correction, we are seeing some specific buying interest in fertilizer stocks. So in that, we like RCF, we like GSFC, we also like Deepak Fertilizer, and we need to focus on GNFC. So specifically GSFC as well as RCF should be on the watch list, because there we are expecting at least 5 to 10% sort of rally from current levels. From the oil and gas space, we like ONGC. It is already into breakout, and based on its breakout, and as we are very close to the major event, I think this particular stock should do well. So it's a buy if they're at current levels and more on dips. We also like Coal India, which is around some 515, 516 levels, and there also we saw a big breakout. Currently it is around around 510, 512 levels, but based on its formation, it's a buy with a target of close to 540. So Coal India, ONGC, even BPCL, HPCL should be on the watch list, but yes, we like specifically ONGC as well as Coal India.
Very quickly, Nirav, buy calls coming on gold finance companies, Muthoot and I believe Tamanna's already talked to you about this one. But okay, let's quickly move on from there. We've got Infosys later today. What are your expectations? Would you consider a long trade in buying ahead of the earnings? Nirav, I know this sounds like a technical question, but as from a fundamental viewpoint is what I want to understand.
Yeah, so as far as Infosys is concerned, again, they have had a few bad quarters, and even in the preceding quarter, we've seen the margins have been under pressure. But hopefully this time around, the commentary should improve, and we should have some positive numbers also, some improvement in the margins, and hinting at the recovery in the entire process and deal ramp up, etc. So I think we are expecting something positive to come out, which should aid the stock price movement also, because valuations have been quite comfortable.
Okay, 19 seconds left. I just want to mark, if we haven't already, Asian Paints. So keep that stock at the back of the mind. Once the market opens, we'll mark it again. But I think that promises to be the telling mover of the day. But the intraday movement of Asian Paints could be very, very interesting in the session today. 3.5% down in the pre-open session. Here are the first trades. About 0.25% lower. Nothing alarming relative to some of the other Asian markets and relative to Nasdaq for sure. But still in the red. Banks and IT would be interesting. But actually, let's just get the heat map up on the screen for a moment and just see. IT is doing well actually. So tech may have been smashed across the world, and chip stocks in particular, but maybe services haven't been. LTI Mindtree is doing well. Well, brokerages, we're looking at a different set of results, I reckon, because the initial reaction on LTI Mindtree on their commentary is looking solid. Infi is okay ahead of the numbers, some strength in Apollo Hospitals, Axis Bank, but very few winners, a lot of losers. Asian Paints right at the bottom of the pile on expected lines, 3.5%. It'll be interesting to see if this is all there is to it, or could there be more, because remember their commentary around Q2 is not that bad, and already a lot of shorts in the system. So watch out for this. Eicher reacts duly as well. Brokerage is not too impressed. The surprise one is Bajaj Auto though, because I thought the con-call commentary was very positive. Brokerages mainly have come out and raised the target price, but that one corrects. Much like Tuesday, Ultratech corrects a little bit, but HDFC Bank is the other culprit why the Nifty is down, despite Reliance doing okay in the session. So Reliance had that big drag, but I think oil upstream stocks likely could be doing okay. Is ONGC doing well? Yes, ONGC too. So it's a tale of two different things. Asian Paints on the downside and LTI on the upside. That's the story for the market, but IT seems to be doing well, Tamanna. That's helping hold the index higher.
And LTI Mindtree, good for them. I mean, a lot of brokerages, most brokerages not very positive on LTI Mindtree. The street thinks differently. So that was interesting. Let's just look at what the broader markets are doing this morning. We've had a weak start. a weak opening as far as the key indices are going. Completely flat on the Nifty mid-cap 150 as of now. So not as weak as we have seen on the Nifty. Small cap index actually in the green. Specific stocks we're tracking this morning. Let's get into that. KC International. They have new orders worth 1,100 crores. At least pre-open, that stock was buzzing a fair bit. Does it continue its up move? Yes, not bad at all. In a otherwise, I would say, lukewarm market, about 4% up this morning on KC International. Just Dial is the other stock we're tracking. Decent set of numbers actually. Net profits up 22%, EBITDA margins up nearly 200 basis points. So Just Dial is up very well on the back of those numbers. Elecon had a poor set of results. So you're seeing Elecon with 9.5% down on net profits, margins squeezed down 9% on the stock. And Alok Industries is the other one which has seen a net loss deepen. So you're seeing Alok Industries down as well. The other stocks we're looking at is Manappuram and Muthoot. Remember, Jefferies has initiated coverage on both these gold NBFCs. They're quite excited about them. Both stocks about 2.5% to 3% up between them. Z Entertainment is the other one we're looking at. They're raising funds. The street was excited about it, rewarded it, but clear scope of profit booking visible in Z this morning. So these are some of the movers that we've been discussing, but largely I would say a very careful kind of trade in the opening session, Samina.
It is, and it's on expected lines, right? You are seeing momentum weakening at higher levels, and like I said earlier, the last few days the markets might have made record highs, but they've come in on not very significant volumes, and they've been very small, largely insignificant moves, at least on the index. IT, for obvious reasons, is holding up. Good earnings from LTI Mindtree. Trump is good for business, which means he's good for tech companies, and anybody doing tech in the US is expected to benefit. So those are a few factors that are playing out well for the sector. LTI is not seeing a 10% up move, but a good enough 2% gain is what we're getting in. The management will talk to us shortly and will help us break down what the outlook looks like, and that may be another trigger for the stock to go up once, of course, that interview is live. Asian Paints is weak. It's been a weak quarter. Margins are under pressure. Brokerages are circumspect, even though a lot of it was potentially in the offering, and it's recovered well. So what we saw is even last quarter, the stock reported weak earnings, sold out, and recovered on the following day. From the look of it, Asian Paints may actually end the day positive. Who's to tell? But for now, well off the day's low point on Asian Paints. Amongst other stocks, you have a whole bunch of them that are reacting. Tamanna's mentioned Elecon. I'm going to add Z to that list, 6% lower. UTI Asset Management, I'm not sure what's happening here, but the stock is getting a huge hit, down 5% as we see it. Alok Industries on back of weak numbers is down 3.5%. Nalco, so metals are looking a little weak in today's trade, so Nalco is down 3.5%. Defensive names, defense stocks such as HAL and BDL are seeing a cut of 2.5% to 3%. Last 3-4 days, all these stocks that were budget play, like railways, fertilizers, and defense, are actually on the sell side as we get into the budget over the next couple of days. Real estate also looks slightly weaker. Zomato is seeing some profit taking from record levels, down nearly 3%. HOEC, if we can pull that one up, they've discovered a new block, I believe, and the stock is doing well, 1.5% higher. Not a runaway rally because the broader sentiment of the market is rather subdued in today's day of trade. Companies like RVNL, RailTel, Jupiter Wagon are selling off once again in today's trade. Titan also looks weaker. Manappuram, Muthoot are trading with a positive bias. On the winning side, apart from Just Dial, you've got Amara Raja that's up 4.5%. IDBI, All Cargo Logistics, Raymond for the fourth straight day running is pulling out a smart gain of 3-odd%. Bikaji Food is not doing too badly. Take a look at Zensar Tech, another 1% high. But there is no runaway rally in today's day of trade from the look of it. It is a subdued morning. Global cues were weak. Tech is the only standout that's providing the support to the markets. Bank Nifty is going through a time-wise correction. So that's what we have for now. But Shrikant, do you want to comment on market opening this morning? Bank Nifty, IT and the Nifty. What is the trade if there is one for today?
I think, Nifty opened around 24,500 levels, and from there we are seeing some uptick, but till the Nifty is not again starts sustaining above the levels of 24,600, I'm of the view that it is better to be more and more stock specific, wait for some correction. Let's say for IT companies, yes, there we are seeing good amount of buying interest in the first, I'm going to say, for 10-15 minutes of time. So there we are expecting further more activity. In that, we like Tech Mahindra, which is currently around some 1520, 1515 levels. There we are expecting further more activity up to 1575 or 1600. We also like Wipro. And if there is a medium-term view, then TCS should be on the watch list. So tech stocks to do well. And from the BFSI space, we like State Bank of India. Specifically, we are going to focus more on PSU banks for this particular week. And I think fertilizer stocks are at an unchanged level. So if there is any correction or if there is any reversal activity, then there again we need to focus, because this particular sector should do well before the announcement of the budget. That's the overall view based on the technical formation of all these fertilizer companies.
Right. Nirav, you want to come in on a few of these stocks? Asian Paints down 2.5%, LTI up 2%. Any of them looking interesting to you right now, or you avoid these counters for now?
We would avoid these counters for now, but looking at the banking space, I think we are keeping a very close watch on HDFC Bank. The stock has been correcting, and I think we wish to accumulate this stock at all levels. At every dip, we have been buying HDFC Bank prior to the MSCI action. So I think we have been buying, looking at select counters, Ambuja Cement, HDFC Bank, Deepak Fertilizers, etc. And sector-wise, I think in the run-up to the budget also, we would like to have a close look at the sugar space because of the upcoming assembly elections, and definitely the sugar sector is expecting some relief. So I think we should see some action over there.
So a few other movers today. I want to look at Hutco. I want to look at Aadhar Housing Finance, because even though we've been talking about the entire budget play being quite negative, and Hutco is down, but Aadhar Housing Finance up today about 4.5%. If you have to look at one space, and you talked about fertilizers, Nirav, would you look at the rural housing play as well? Because expectations that there would be big announcements there.
Yes, definitely. Because I think after the disappointing general election outcome, I think the government would definitely like to increase the allocation to the rural areas, and I think on that count, the rural economy should get its share of stocks during the budget, and I think the low cost housing, the rural housing should do well.
You've got cement that seems to be doing okay. India Cement, after many days, is out of an F&O ban, and that could explain why the stock is up 5%. Shrikant, are you going to trade India Cement after, I think, since the news, since, of course, the last few weeks when you had that big stake buy in India Cement and went into an F&O ban? I think today is the first time it's out and the stock is up 5%. Does it look like a good trade to you for the next 2 to 3 days, maybe?
I think, the stock is very close to its overbought levels. It is just rallying from the levels of 270 to almost 340. So, if we there is a very short-term view, then there is no point in taking any trade. Even if there is a medium to long-term view, then it is better to take some, to buy if there is any correction. Currently, the stock is overstretched, and at these levels, buying is not having any major risk reward ratio favorable for traders. So it is better to stay away. But yes, Ambuja Cement can do well. There we are seeing some sideways sort of activity, but overall formation is suggesting us that the stock is heading higher. Currently it is around 686, but based on technicals, I think the stock is going to surpass its psychological level of 700 very soon. So Ambuja should be on the watch list.
So cement, Ambuja looks better than India Cement. That's the word coming in. Well, you've also got CEAT earnings. Nirav, how are you approaching tire companies for now? A couple of weeks ago, there was, of course, tire stocks were gaining on back of what was happening amongst the auto companies. Last week, some of them have undertaken price hikes, and we've seen a movement on the stock. Today, of course, we've got CEAT reporting. In terms of expectations from CEAT, and if you have any preferences on the buy side in the sector.
I think most of the positives have been priced in. I think there has been very good demand as far as the OEM space is concerned. Replacement demand has been good. And I think as far as the cost side is concerned, then the prices of natural rubber, synthetic rubber have been quite stable. And of course, the price hikes which have been initiated. So I think all the right moves and I think everything is there in the price, at least for the time being. So I think we should see a kind of a flattish kind of a response to the results because they've already been factored into the price.
There's Aurobindo Pharma flashes on the screen. The board has approved a buyback to the tune of 0.88%. 750 rupees is the size of the buyback. So this is an important development on Aurobindo Pharma. Of course, the stock is not doing much now, but it wouldn't surprise me if it sees a little bit of weakness right now. The buyback shares at 1460. So that's actually at a huge premium to what the markets are trading. Anita, we want to come in on this one. A buyback approved. It may not be too large in that sense, 750 crores, but at a premium of 1460. Current price is 1363.
So I think it will all depend on the acceptance ratio and the mode of buyback, whether it is an open market buyback or whether it is through the auction route, etc. So I have not actually studied that announcement. So I think we need to study the announcement, taking a further call in the stock.
Okay. So Aurobindo Pharma on the radar. What else is moving? Just Dial is having a runaway morning, by the way. And we discussed this pre-open. If I recall correctly, Shrikant, your advice was to exit if the opportunity permits. Is this that opportunity on Just Dial? And if you have any view on an all-cargo logistics, Amaraja and India Cements?
No, I think so. I was of the view that it is in the range until the stock is not crossing its previous high of 1150, 1200. It is going to remain in a range, and buying is advisable if there is any correction. But today, after this such a huge gap up opening and crossing the level of 1180, I think now the stock is ready to move towards the next levels of 1350 or 1400, where it has resistance in terms of retracements and extensions. So buying is advisable if there is any correction because it has broken the range. But at these levels, buying is again not favorable for short-term traders.
Okay. So you need to be a little long-term on a Just Dial right now, but that's definitely one of the contenders for stock of the morning. Apart from LTI, Mindtree and Asian Paints that are moving on numbers, so is Just Dial. We'll take a very short break. I want to thank Shrikant and Nirav for joining us on the first segment or the first session of India Market Open this morning. But on the other side, we're having a very interesting conversation. It's like the Goldilocks story. If the porridge is too hot or too cold, how do you get one which is just right? And that's what the mutual fund industry may just see. A new set of products for those who have a bit of a budget but not too much. We're going to be talking with Radhika Gupta, Managing Director and CEO of Edelweiss Mutual Fund, on SEBI's asset class proposal after this very short break. Stay tuned.
Back with India Market Open, and let's get in Radhika Gupta, MD and CEO at Edelweiss Mutual Fund, to talk about the latest proposal to have a new class of a product available for investors. Radhika, good morning. Thanks for joining in. And at the outset, just set this up for us. I mean, is there, it's a great proposal. Do you reckon, is there a need that you sense amongst investors who might not have the wherewithal or the capital to put in money into a PMS or an AIF, but were wanting a product like this, which is not a low ticket size product? What does this do? How does this change the landscape?
So, Niraj, at start, I think it is a natural evolution of the Indian asset management landscape, which started with mutual fund, which is a very constrained offering, and rightly so, because it is meant for retail investors. And in the last few years, you've seen the popularity of PMS and AIF products. So, as you said, what is proposed in some sense is a middle ground, although I do believe that much of what you can do on a PMS platform can now be delivered perhaps slightly more efficiently on this platform. So I think the appetite for new investing styles, new products, new asset classes is evolving. We are seeing that even within the mutual fund business, whether it's factor-based investing, whether it's smart beta, some of these strategies are getting interest on the mutual fund platform. So the Indian consumer, in terms of maturity and in terms of desire for new offerings, has certainly evolved. And so I think this comes at an opportune time, actually. And finally, in terms of convenience, the mutual fund platform is a very convenient operating platform. As the consultation paper mentions, it's an efficient platform. You can do your SIPs. There's a certain set of regulatory comfort and reporting. So it actually all comes together quite well. I mean, I'm genuinely very excited about the proposal.
All right. Hi, Radhika. Very good morning. Now, I'm just trying to understand in this sort of in-between, and it seemed like it made sense, right? You have enough and more products for the retail investor. You can start from 150, 200 rupees a day. And then you have products for those who have a 50 lakh rupees and further threshold. Now, something in the middle for 10 lakh rupees threshold. What is the kind of appetite you see for this? And do you see this adding on to flows, domestic flows, in any significant fashion? Or is it more of a reallocation which will take place of the same pie?
I think it's somewhere in between. I mean, I think there is some money that, so let's just break it down. I think conventional mutual fund strategies, I mean, of our 60 lakh crores of AUM, 35 lakh crores is in equity or hybrid equivalents. And I think that remains the core of most consumers' portfolio. Let me be very clear and say that anything that is proposed on this platform is more satellite allocation. So I doubt it's going to challenge the existing mutual fund landscape. What I do think it may challenge is the current set of, as I said, PMS providers, category 3 AIF, simply because of mutual fund structure, the ticket size becomes more accessible, the taxation becomes far more favorable, and the operating conditions become a lot better. So I think it is some taking away from the existing asset management pie, and it is some expansion of the market. And the constraints, as I said, are mutual fund plus. So if I give you an idea, for instance, in mutual funds, you can only use derivatives for hedging. On this platform, you can use derivatives to take short positions. In mutual fund portfolios, you can't run concentrated equity funds, very concentrated ones. Here, concentration limits are more open. Here, credit limits are more open. So it's plus, rightly so. And I think there is an appetite. I think the Indian consumer has gotten more risk taking. If sold right, this could be a very good step.
Right. Radhika, let's just break this down, right? The reason PMS had a threshold set by the regulator was because these are concentrated portfolios. Yeah. It's not as diversified as a mutual fund is. Now, what you've done is you've created a hybrid model. Sure, the guys with the smaller ticket were doing this in the unregulated market, nevertheless. What I want to understand from you in terms of product launches, is it going to be largely skewed towards long-short strategies, which have become very popular in the recent past, and inverse ETFs, because those are the two that were very specifically mentioned in terms of building out this hybrid PMS mutual fund asset class?
So I think SEBI will eventually, and perhaps not all of this is clear in the paper, but my guess is that SEBI will eventually give categories in which you can launch products. Unlike AIF and to a certain extent PMS, they are open field. So, there is, it is up to the manufacturer to ideate on product category really. For instance, category AIFs have 3 very, very broad categories and a few subcategories. I think here the categories will be a lot more defined, like the current mutual fund universe where you have a large cap and mid cap and it's very clear what you do in each. I suspect it will be much more than the 2 categories proposed. So if in my reading of the document, for instance, there will be some flexibility around fixed income solutions that combine credit, because they also propose things like redemption restrictions, which you can't do on a mutual fund platform. Now that will be very useful if you were to run a credit kind of product. Long short funds is one example. 130-30 funds are very, very popular globally. Inverse ETS, these are a few. There's more exemption in terms of holding REITs and InvITs. So perhaps something in the REIT and InvIT space, concentrated equity portfolio could be another option. So I am hoping to see 8 to 10 options come out of this.
Just one more quick question. PMSs usually have a lock-in and... Okay, I think Tamanna and Niraj want to come in. You have a question now? Okay. They usually come in with a lock-in and a high cost for a 10 lakh. And that for good enough reason, right? Because you're building concentrated portfolios on a client's demat. And you've got to be far more active in that sense. Keeping that in mind, how will the cost-benefit analysis work out for an investor and also for a producer like yourself? Because this will eat into the pie of mutual fund business and the PMS business that you're already running.
Yeah. So I think from a consumer point of view, this is likely to be more efficient. Now, I don't know the cost structure that SEBI is envisioning, but I assume it is going to be similar to your regular equity mutual fund. So say I was running a long short equity fund on this platform or a concentrated fund. I suspect the cost, rules will be very similar. On a PMS platform, a consumer is paying demat charges. They are sometimes paying performance fees, which are of course not applicable on a mutual fund platform. Most importantly, when the PMS does the churn, they're paying short-term capital gains tax or long-term capital gains tax on each trade. That doesn't happen in a mutual fund platform because there is pass-through taxation. So I think consumers are likely to be meaningfully better off pari passu on product. From a manufacturer's point of view, I think it really depends on the business that you have. For instance, for us, the core of the business is the mutual fund business. Can we, of course, within regulatory guidelines, leverage our existing team, our existing capability to also build products in this new asset class? Yes, we can. So I think for us, it is more operating leverage. If you had a large PMS business, perhaps it could take away. So I think for a manufacturer, it depends on what you have and the setup that you have. But for the consumer, I think this is better off.
Okay, so better for the consumer, more products on the anvil that we will be seeing. Will it be a game changer for the industry, Radhika? Or is it also a way to, I would say, manage all of the derivative volumes in a more structured fashion? If I look at it that way, and in the rubric of the broader attempt of regulators to ensure that people don't get hurt, small investors don't get hurt in the derivative segment, does this also fit into that larger picture?
If that is the intent, then I think it is a wise intent. I think the regulator has very rightly said for a long time and been concerned about retail investors' participation in derivatives. And, in this way, if funds and professional managers can offer you products that use derivatives to generate returns, and they are professional managers, and those are accessible to you at 10 lakhs. And keep in mind, it's 10 lakhs across all the strategies I offer as a new asset class, right? It's not even 10 lakhs per product. So it's actually quite accessible to the consumer. So if that is the intent and it's part of that larger plan, I certainly think it's a very, very good idea. Keep in mind, SEBI has also put in or proposed very high thresholds, and I think reasonably fair thresholds for who can launch this. If you're a new player, you need a certain amount of fund management experience, AUM that you've managed. So at least they're saying this is for seasoned players. And if it's part of that plan, it's a very good one. Is it a game changer for the industry? I think it's too early to tell, but it certainly opens the industry to more products, and that can only be good.
All right. Thank you so much, Radhika, for joining us today. Always a pleasure to speak with you here on NDTV Profit. So Radhika Gupta there saying that it's definitely going to open up more avenues. Is it a game changer? Too early to tell. In our earnings watch, L&T Finance on the radar. They posted their Q1 numbers yesterday. The company recorded its highest ever profit of rupees 685 crores. We spoke to Sudipta Roy, CEO of the company, about his FY25 outlook. Listen in.
My guess is that the resolution time frame will play out over a period of 6 to 8 quarters. So Q3 FY25 or Q4 FY25 is probably too early before many of those assets see a resolution, because the progress in real estate construction as well as the overall resolution of the assets is a time-consuming process. Anywhere between 6 to 8 quarters is what I would guess before we see reasonable resolutions of many of those projects. But we are in a commercial cycle, commercial real estate uptick cycle. There is robust demand both on residential real estate as well as commercial real estate, and I think those tailwinds are helping us sort of walk through and work through some of those assets that we have in our SR portfolio. So the scope for expansion is primarily will come through cost efficiency as well as credit cost. So these are the two lines of lines that we are focused on. If you would see, our cost on a quarter-on-quarter basis has been largely stable. In fact, overall cost has gone down from 980 crores to about 966 crores this quarter in terms of overall cost. In terms of credit cost, also we are focused on bringing down credit cost, and that is why you see initiatives like Cyclops, etc., that are being rolled out. Obviously, there are, credit cost obviously is a multiplicity of many factors, especially when you have a large farm-related business that are sort of, in the mercy of the environment and the vagaries of weather, especially the progress of the monsoon. Given the fact that the monsoon has been good this year, we expect that, especially the tractor business, which has been sluggish last year, we will see efficiencies in that business as well. Overall, our focus is to make sure that our credit cost trends downwards as well as our cost to income ratios also trend downwards. And I think some of the sort of the ROA expansion pathways lie through those two lines. Obviously, the fee line also has some work to be done yet, and we'll be focusing on that line as well. So overall, these three lines might lead to have some pathways of ROA expansion, and we remain committed to the guidances as per the Lakshya strategy of a 2.8 to 3% ROA by exit FY26 is what we are focused on, and we are hopeful that as an organization we might be close there by that time frame.
Well, that's L&T Finance Holdings. Must say, the stock has come off from the highs of the day, but the brokerages largely have been constructed. JP Morgan, UBS and the others have spoken about some positivity in these numbers. Let's see the target prices in or around the current market price. Okay, on the note that the markets are a bit off from the way they started off, we're about, off from the lows of the day, but did dip to about 1/3%. We slip into a quick break, but we speak about the budget every day at this time. On the other side, we'll be joined by Suzan Hazra of Anand Rathi to talk about their budget bets.
Sujan Hajra, Chief Economist and Executive Director at Anand Rathi Shares and Stockbrokers is joining in. Sujan, I know we only have, good morning actually, we only have 2 to 3 days to go ahead of the budget. But I'm guessing your budget picks have already gone out to your clients. Let's start with what sectors you think could be key beneficiaries at this budget, and whether or not there is still any merit in buying into them between today and Tuesday morning.
So, in terms of the positive factor, which we think that the government, the public capex has increased pretty significantly in the last couple of years. There has been a little bit of concern that whether government will maintain that momentum. Our sense is that we are still seeing the 17 to 20% increase in capex. So from that perspective, infrastructure becomes a major player, because there is still apprehension whether the government will go ahead with strong capex. So, but within infrastructure, particularly we think renewables, water, these are the sectors where there will be additional allocation apart from the usual ones like roads. So we think there is still upside to that. On the top of that, we also think this budget will try to address a lot on the rural and agricultural side. Now, one of that will be also rural housing. So we think both from the infra play and the rural housing play, cement is another segment where there can be a significant amount of play, and we think there is still time to play this space. Government has pretty categorically said that on the FAME, they are not going to do something in the budget, but we think outside the budget there will be some push for EVs, particularly in the buses and the two-wheeler segment. So while it might not play out along with the budget, but subsequently we expect that space also to play out. And also we think some increase in some push towards consumption, including some restructuring of the personal taxes.
Okay.
So therefore the consumption plays like FMCG, retail, we see some upside there, which can be played out even now.
All right, let's Sujan, good morning, Tamanna here. Let's get into what your budget bets are and some of the stocks that Anand Rathi has put out. NCC, PNC Infra, HG Infra, ABB, Siemens and Cummins. Now, let's get into a bit of more detail on why you've picked these particular stocks as an extension of the manufacturing and infra push.
Yeah, absolutely. And also on the infra side, if you look at in the capex side, what we think will be, there will be significant push towards as you said, the renewables, and also on the side of water. So we think these are the kind of companies in the space which both from the construction side and also from the energy side, these are the kind of plays which will be the best bets to play.
Sujan, are the budget bets effectively a tactical trade, or do you reckon that this may well, based on what comes in the budget, of course, be something that could do well over a 12 to 18 month period? The reason I ask is because in some of the more obvious ones, which are likely to be key beneficiaries, the valuations kind of bake in the numbers for the next couple of years, at least. I mean, capital good players, for example, the MNC ones.
No, you are absolutely right. You are absolutely right. But having said that, at the end of the day, you are these. First of all, these are so far these are budget picks. These are tactical in that sense. But if you look at from a structural perspective, also we are positive. We are positive on infra. Capital goods, and as a play on that on the cement sector from a medium to longer term perspective, even from a 3-year perspective. So obviously the straight valuation part is a concern, but having said that, as you factor in the earnings expectation for 27 or beyond that, because these are also from a longer term perspective, you have to look at the longer term earnings figure. So from that perspective also, we think these are bets which are interesting.
Sujan, you spoke about consumption play and how you will see a further upside there. What are the stocks that you would pick to really push them through? I mean, we've been having this conversation over here whether the push or the pivot from discretionary spend or premiumization actually moves back to staples. Do you see that as an outcome of the budget announcements? And when we talk about boost to consumption, what exactly are you penciling in?
So on the consumption side, first of all, on the policy side, what we are seeing that some amount of relief coming to the personal income taxpayers. Because if you look at in the last 10 years, the effective rate of taxes has gone up by more than 1 percentage point. And there has been a 40% inflation during this period, but the tax slabs have not changed much. We think this will be a good time to push. We have seen in the last couple of years, the private consumption, as in GDP, that hasn't done well. So this is a good time to push that. And in particular, we think that there will be a focus on the agriculture and rural economy. So some kind of pickup at the bottom of the pyramid is also so agro-related segments in the context of FMCG or retail. There can be a push there, and these stocks have not done very well in the last 12 months. So I think there is a relative value to those stocks also. But having said that, the aspirational demand in India, the premiumization trend, that will also continue. So on the consumer durable space also, and if you look at the PLI scheme, further push to PLI scheme, particularly consumer electronics can benefit again. So we remain positive on the consumption side, both from the perspective of premiumization, but contra trend from the past is that some pickup at the bottom of the pyramid also.
All right. Thank you so much, Sujan, for speaking with us today. Sujan Hajra there talking about Anand Rathi's views on the budget and the calls that they have in place. 2 to 3 days left for that big event. And of course, if you're wondering what NDTV Profit is doing on budget day, all of our big faces and names, including our think tank, on your screen. This is going to be one you shouldn't miss. But before we wrap up the show, quick look at what's happening in the markets and definitely in recovery mode. On the Nifty, back in the green after a bit of a dismal start, I would say. But you've seen markets claw back up fairly convincingly. LTI Mindtree is having a strong start. So all of those brokerage calls which were not too excited about LTI Mindtree numbers is something that investors seem to have ignored, at least for today. LTI Mindtree up 2.5%. ONGC, we told you that they've commenced production in a new coal block in Bokaro, Jharkhand. That stock rallying nicely, up 2% as well in trade right now. What else is working? I think another day for IT, not just LTI Mindtree. Look at TCS as well, at least in the green at this point. Consumption also not doing too badly relatively. So if I look at an ITC, a Nestle, a Britannia, I'm talking about staples consumption. They're doing fine. Not so much for an Asian Paints, whose numbers left a lot to be desired for a second quarter in a row. But surprisingly, Bajaj Auto is the top loser on the Nifty this morning, at least at this point, down about 2.5%. Bajaj Auto perhaps seeing some profit booking. Their con call details were positive, numbers were good, brokerages were excited about it. But the run-up, I suppose, is now being balanced by taking some money off the table. Asian Paints, of course, still feeling the pinch, but off the lows of the day, definitely. So a bit of a recovery there as well. We'll take a very short break, but stay tuned. Talking Point coming up next.
Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The show today, we'll try and mark some of the key movers because there are a few which deserve a particular mention. Post doing that and trying and get a sense of the key brokerage notes that have come in today, we'll try and do a conversation or get you a conversation with Bajaj Auto. In the first 45 minutes, Bajaj Auto was amongst the top loser, if not the top loser in the markets. In fact, speaking of markets, we are off the lows of the day, which is actually a good sign. So the Nifty 50 intraday chart will come up on your screen. And I think we're doing okay. So in the green, off the lows of the day, which is actually a good sign. But if you look at the top movers on the Nifty, let's get the top gainers and losers on the Nifty. You will see that there is a Bajaj Auto right up. This is the point contribution, of course, and Reliance will top the chart again along with Asian Paints. But in terms of the percentage fall, I think Bajaj Auto, which is at number 3 on the points contributor, is probably the largest one. So that is the first thing to keep in mind. IT is doing well today. So it's not just LTI Mindtree which has done well. Let's pull up the intraday of LTI Mindtree and Nifty IT. Of course, Nifty IT is up 0.4%. But LTI Mindtree, to my mind, I think has done okay, 3% higher for itself. But the likes of TCS and Infi too, ahead of its numbers, Infosys is also in the green. So that's the texture of the market today. This is the Nifty IT piece, of course. So bear that in mind. Now, specific pockets that I want to definitely highlight, and one of them has to be Zee Entertainment. There's a lot of frenzied conversation around Zee and the valuations that it trades at, and the fact that they announced that they'll do a fundraising. Now, instead of doing 2,000 crores of equity raising, Zee is going to issue FCCBs worth rupees 2,000 crores. And I think the street has been a bit disappointed because the expectations were that there would be some bit of direct equity fundraise from some prominent names that could come in. I guess that is probably something that has not helped. Now look at the Elara view on FCCB issuances, by the way, on Zee, of course. Elara Capital says that the proceeds will come in a phased manner, which is good for Zee. It gives them a war chest to be able to combat the increased competitive activity, noticeably from Disney Hotstar and Jio Cinema combined, if you will. And it also helps them to make some key acquisitions, if you will, of some potential digital assets as well as some channels that may come in if indeed the Competition Commission speaks about some channels not being allowed in the merger for the other competitors. So I think lots out there which Elara seems to be constructive on, but the stock not seeing any kind of optimism in the first 1 hour of trade, completely sloshed out. Now, what has done well, like I said, is IT services. I think this is happening on the back of the commentary that has come in from LTI Mindtree. In the morning, I mentioned about how if LTI Mindtree, if Infosys does what LTI Mindtree has done, then you have 3 of the 4 large caps that have declared the numbers actually give positive commentary, and which is great news. Now, if you want to know what LTI Mindtree's commentary was as well as what the numbers look like, let me get in my colleague Rucha to give a sense of that. Rucha, good morning.
Good morning, Niraj. So LTI Mindtree reported decent numbers. Revenue was above estimates, but profit and margins were a tad lower. Now, talking about constant currency QOQ revenue growth, the company reported this at around 3%. Order inflow was also healthy at $1.4 billion. Talking about headcount, largely flat headcount on a QOQ basis. Attrition also stable at 14.5%. Again, flat on a quarter-on-quarter basis. But what was important is what the company mentioned in the call. The company mentioned that they are seeing promising signs of recovery in the demand. Now, there are 2 problems which we largely saw over the last few quarters. Number 1 is the conversion of deal wins into revenue. Now, the company mentioned that deal wins have been ramping up pretty healthy in a pretty healthy manner, and this has been turning into revenue. Number 2 is clients were very tight on their budgets because of the uncertain macro environment, US elections, etc. But LTI Mindtree mentioned that companies have been starting to deploy their savings into the high priority transformational projects. So these kind of transformational projects and the cost optimization deal wins is what will drive the revenue going ahead. It is also seeing clients laying out the initial foundation for the AI and generative AI as well. Now, ramping up of deals, as I said, is reflecting in the revenue, and this will largely drive the growth. But what is the problem with LTIMindtree is the margins. Now, the margins have come stable at around 15%, a tad lower than the last quarter. But the company mentioned that the levers going ahead will largely be growth, because subcontracting cost and utilization have already bottomed out and are exhausted as levers. So the company's target of getting back to the pre-merger levels of 18% seems difficult, and most brokerage houses have remained neutral in their rating for LTIMindtree.
Okay, Rucha, thanks for that. So viewers, I hope that gives you a good sense of why tech and LTIMindtree is in focus. Now, we need to talk about Asian Paints today because there are okay, let me get to the nuance of the trade in a bit. First, let me get in my colleague Harsh to give us a small sense of what the numbers look like and also what have brokerages said. Harsh, good morning.
Well, numbers a bit of a disappointment, surely, Niraj, but we're seeing the stock which started off at the bottom in terms of the day's trade today, at least. Of course, just about an hour we're just about an hour through the day's trade, but we're now at the day's high in terms of the stock price. And therefore, let me highlight a couple of brokerages, especially on Citi. What they've done is they've reduced the target price on Asian Paints. They've reduced it from 2,600 to 2,400 now. They're expecting around an 8% gap in volume and value in the near term. The July 24 price hike was just about 1% is what they're saying. And rural demand uptick, which has been spoken about as a key positive, can further hurt product mix is what they seem to be suggesting. So actually a negative more than a positive. So an interesting take there. Competitive intensity has increased and will keep margins under pressure. And the FY25 expected revenue growth by Citi is just about 3%. Margins expected at 18.7 and 13% EPS decline year on year is what they are anticipating for FY25. And hence a bit of a reduction in the target price. JP Morgan more constructive on Asian Paints, neutral rating, target price 2,800. Earlier was 2,870, so they too have cut their target price. They believe that the premium segment is going to likely drive the success, and that's going to be the crucial piece to look out for over coming quarters. They're expecting negative share price reaction, which has happened, and intensive competition to threaten margins is what they also expect. Jefferies retaining their underperform, target price 2,100. They've looked at where international revenue has been at, that's declined by 2% odd. Profits also have seen sharp declines where international business is concerned. They believe infra demand has been subdued in Q1, hopefully recovers in Q2. Cuts EPS estimates by 1 to 7% all the way through FY27. That's a key one for me. And valuations at around 50 times is expensive is what Jefferies seems to suggest. Now, I want to quickly go to a small conversation with Amit Singhal, MD CEO at Asian Paints. He's basically talking about price hikes as part of what he said in the management commentary. Listen in.
We see further challenges which are going to happen in terms of looking at further inflation, which we expect could be in the range of about anywhere between 1.4, 1.5%. And therefore, possibly we could see further price increases as we kind of go forward to that extent. So I think that is something which we are seeing in the environment, and that is something which we'll keep a watch on as we kind of keep on doing. The industrial business is on a good stream right now, and we think that this is something which we are now focusing at in terms of growing, and we'll continue to do that.
Now, viewers, remember, this might be too early. We'll, of course, speak to the management exclusively at 12 p.m. today. So you want to tune in for that conversation as well with Amit Singhal. But one of the other reasons why the stock could actually be off the lows of the day is because there was significant short build-up done, and some of those shorts might be coming in for cover. So that's one thing to keep in mind. Remember, the stock didn't crack 5-6% on open, and it didn't have a trending lower day. at such a point of time, if you build such high short positions. So ahead of the numbers, the OI was at a one-year high of $580 million, which is significant for Asian Paints. And therefore, I reckon that some of those shorts might have come for cover, which essentially also helps the stock move higher. Keep in mind that their commentary around Q2 is far better than what they've said for Q1. So multiple reasons. And I think some of these questions will be asked to the management by our team today. And you would tune in for that conversation at 12 p.m. to understand what Asian Paints is trying to say. So might be a very important conversation for you to log in. Keep that in mind. Okay, time for a very quick break. We come back from the break, talk about some of the other movers and shakers. Stay tuned. Back with Talking Point right here on NDTV Profit, and the markets yet another record high, but that would happen with the markets closing in a record high every previous day. So no surprise thereof, but yes, the intraday recovery is very interesting. What is a surprise to me though is the way Bajaj Auto has reacted today. It is amongst the top losers today because I thought from what the management commentary seemed to be on the call that there could be some optimism around these numbers. It's down 2.5%. Good time, therefore, to get in Mr. Rakesh Sharma, Executive Director of Bajaj Auto, to talk about some of the finer points of the quarter and maybe the outlook, because I thought the outlook was, to my mind, Mr. Sharma, fairly buoyant given the current scheme of things. But let me first ask you, welcome you on the show. Thank you for joining in. And can I just ask you about what you felt about the pulls and pressures in the quarter? Because the belief is that the consumption or the consumer behavior is at best unpredictable, and it's worst if indeed the rural recovery doesn't shape up, then two-wheelers might have a spot of bother.
Good morning. In the previous quarter, at least the domestic motorcycle demand was really front-ended. because after many years, we saw this confluence of festive and marriage dates all occurring in the last week of March and the first half of April. So therefore, what happened was that demand got really front-loaded, and we had huge demand when you compared it very simplistically with previous April. And May and June expectedly were lower. But when we sift through the trends and do some analysis, we think that there is an underlying growth of about 6 to 8% in the industry, and much more driven by the top half, which is the 125cc plus segment, which is growing at double-digit rate. So those underlying trends seem to be intact as we step into Q2, which is obviously, July and August are going to be low months, and then August a little bit of festive starts, but really the big quarter is going to be October, November, December. So, but the underlying trends definitely seem positive compared to last year, the same quarter.
Okay, which is good to know. And I'll get to those in just a moment. But can I get one question out of there on the margin front and the raw material cost inflation front? Because that is a fear in the minds. If there is a China revival, if indeed base metals move up, and I know those are very unpredictable, but your margins were much better than consensus. So I'm trying to understand, and you've mentioned that the raw material to sales ratio was also decent. So is it more an external factors led margin beat, or was it internal factors led? And how easy it is to predict what could happen in the next few quarters?
Yeah. So the margin story has been, this is the third quarter where we have delivered 20% plus EBITDA at the corporate level. And this is really the outcome of better realization emanating from better mix in almost each of the business units, and a very, very rock steady performance of about a lakh of units in the quarter by the three-wheeler business. A tad improvement in the forex realization for a export business which has grown a little bit. There was some cost pressure which we had passed on, but it was in the range of 1 to 2%. Going forward also, the situation looks very similar. There are some commodities up, but there are some commodities which are down. One key factor over here for us is that what you see is a very blended margin, and you can imagine that we've got the components of this blend are the domestic motorcycles business, which I think is at a very steady pace. But then there is the electric business. 1 year back, our electric business was 2% of our domestic business. Now it's 14% of our domestic business. And of course, the electric business, two-wheeler electric business, is margin dilutive at a corporate level. So we've managed to deliver the 20% despite this rise from 2% to 14%. This 14% is set to grow further. But then there are, there has been supply chain work which has been ongoing. Costs have been consistently coming down, and we'll have to balance this off with the improving mix. Hopefully the exports steady but small growth recovery aided by the better forex realizations will continue. So you can see there are these ups and downs which sort of offset each other, which lead us to believe that we are at this point of time, it seems to be in an equilibrium state. But then, there are disruptions which can occur anytime, which have to be then managed as and when.
No, but sir, so if disruptions or black swans notwithstanding, with the presumption that your EV numbers do go up, you still believe that after doing 3 quarters of northwards of 20, you can deliver another 3 of northwards of 20? Possible to predict?
Well, again, it's not that we start a quarter or a year with a target of doing 20%. Like I said, we are pursuing a maximization strategy for each business unit with an idea of the baseline profitability.
Okay.
But how in the end the blend of each of these business occurs, That determines the blended corporate margin. So I won't say that we start with that, but if every business performs exactly the way it happened in quarter one, then I would say we are in a similar situation. But if suddenly we find that the domestic business, motorcycle business runs away with it, or there is the electric three-wheeler business sees a surge, it could be margin positive too. So, and vice versa. So it's difficult to within a narrow band, beyond a narrow band, say that this is exactly what our corporate margin is going to be.
Yeah, no, understandable. I mean, 19.5 doesn't do too much of damage versus 20 per se. So, but just wanted to get that out of the way. Okay, now the bigger consumption piece, right? I think on your con call you mentioned that, or you mentioned to me right now as well, that 6 to 8% industry growth. Maybe 125cc grows faster. People believe you will grow much faster. You have the cheapest TV, you have CNG, you have 400, Bajaj 400, and multiple things out there, right? How do you expect your growth numbers domestic to be like if the industry is 6 to 8? Yes, it will be faster than that. How much faster, Mr. Sharma?
This type of question is it's very difficult to answer that for anyone. In the real world, nobody can say that, if the market grows at 8, I'm going to grow at 10.5%. It's not I can tell you what strategy we are pursuing.
Let's do that, sir.
There is a story out there, and I can tell you we will grow faster than the industry because that is what has been occurring over the last few quarters. But beyond that, to pin it down to a digit, is, I think, an exercise in futility.
Okay, fair call. So let's talk about the strategy then, because that might give, and people can then make their own assumptions or their estimates.
Absolutely.
Please.
Absolutely. Well, so our strategy has been till now to focus on the 125cc plus segment, and where we are 1 or 2 percentage points shy of achieving leadership. We have refreshed our flagship brand Pulsar completely. We've got something like 20 models out there serving each of these sub-segments in the 125 plus segment. And the capstone was the 400, which we just launched, which has again got to a very good reception. So these models are successful. They're being received well. So I think that is a growth platform which will continue to be driven. The two or three moves which we have made in the closing June days of June are setting up some more growth platforms, things which will give us new business which can be scaled up. And the biggest one, of course, in that is the Freedom 125, which is the CNG, world's first CNG motorcycle. Now, with this, we are finally able to take a good shot at a very, very large segment where we have been underperforming, which is the 100 to 125cc segment. This is almost 750,000 units per month. And 70% of this is served by the CNG network in 335 towns. So which means that approximately 500,000 customers are out there who are mileage conscious. And our proposition to them with this is not just the 50% savings which the CNG bike will deliver, but a standout style, ergonomics, the reassurance of biofuel capability, which has all been extremely well received. I know that these are early adopters, but their reception has been euphoric. We have to see how the early majority, which is usually more sort of considered in deliberate in its evaluation, how they take to this, what the CNG filling experience is. And I'm hoping that, the gas distribution companies will rise to this opportunity as well. So a lot depends on that. But then it is reasonable for us to entertain the thought that we have arrived at a defining moment in the motorcycle industry. And if that goes as per plan, then over the next, maybe not in quarter 2 itself, because we will just be placing the product, but going forward in quarter 3, quarter 4 and beyond, this could bring in significant volume increase to us in a segment which we have till now been underperforming on. Then when you put together the past success and optimism around the 125cc plus segment and the move with the Freedom 125, we are really, got the entire motorcycle industry in our crosshairs.
Got it. So I have one question, final question on that. And I'm not a biker, so I qualify this at the start by saying this, that I don't understand it as well, but based on what I've read thus far, there is optimism around this launch. The question though is that the queues, I heard you mention that you hope the gas stations rise to the occasion. What if it is for them yet another product? Because a biker doesn't like to wait too much, right, in the queues. And outside our office, we have long queues for CNG filling. 2, I read in a note that it is a lot heavier than what an average 125cc is. Could that be a concern? I'm sure you've done your checks, but I'd love to know that answer. And lastly, if indeed this product, because you are launching, I believe, a higher variant and a lower variant as well in terms of power, does this help you negate the margin dilution that happens because of EVs as the EV share also moves up?
Well, that's a solid portfolio of questions, but let me just take it one by one. We are more than positive about the gas distribution companies rising to the challenge, and I'm not just, this is not just coming from within me. We have obviously been in touch with them and they have been very, very supportive, I must say, because in the end, these companies are putting in huge amount of capex into building infrastructure, which is, pipelines and CNG pumping station. What they want is throughput. And the transport segment, which is buses and cars and three-wheelers, are a significant segment for them. Now, with the addition of this vast number of two-wheelers, they're very positive about it because it is bringing new customers and it will help them to pump more gas through their network and have a better utilization. And this was seen in the beginning with cars and three-wheelers also. These lines were separated, because the petrol pumps and these gas dispensing stations, they take note of the fact that these customers are coming and they need to serve them well. I have no doubt that they will respond to the rising numbers which start visiting their stations and provide more outlets. So I think there may be a lead and lag effect, but eventually, given the government's focus on this, I think we should see a better customer experience for two-wheelers as it goes along. When it comes to the second one, which you asked about the weight of the bike, in fact, we've got already 5,000 plus bookings. We had just opened it in Maharashtra and Gujarat and now nationally. But most of these 5,000 plus bookings within less than a week have come from just these 2 or 3 states. We've got some 45,000 inquiries. Even our finance company has received 15,000 inquiries for loans. So there is and we are talking to some of these people, to the early people. There is, having a solid weight is actually being appreciated by a lot of people because, the traditional 100cc bike is a light bike, keep the bike light so it can give a nice fuel consumption number. But this, so I would say that is actually a compromise. That where you made the bike light, the tires very, very thin, and what happens, it means that the balance and the steadiness on our kind of roads gets compromised. That's a compromise because you want to keep the weight low to give better mileage. But here, because of CNG's ability to give much better mileage, that constraint is not there. And in fact, of course, the CNG cylinder also adds weight. The echo from the market is, wow, this is a solid bike. So I need not get worried about it. And it has presence. So the style is causing presence. So I would say that actually having a heavier bike in the kind of style which we have put is actually a positive for these people who are used to these teeny bites because of some other reason. The third one just escaped me. You had a third point.
You've kind of given the answer already, but what I just asked is that if the numbers pick up here, are they margin accretive?
Yeah. Well, right now, we are focused on scale. The numbers from a corporate point of view in Q2 would still be very, very small. And we are just looking at building scale. Its impact on the margins, etc., will start to happen much later.
Okay. I love the term teeny bikes, though, Mr. Sharma. Thank you so much for the answer to somebody who's not a natural biker per se. Really helped. No. But thank you for the interview today, and look forward to talk to you soon enough.
My pleasure.
All right.
Thank you.
That's the view from Bajaj Auto on the numbers and the outlook ahead. Better than industry for sure. Wrap on this leg of Talking Point. Thanks so much for watching.
Welcome to the FNO Show. It's an interesting Thursday morning on the street. While you've got those big earnings, a drop on NASDAQ, Asian markets trading weaker, our markets are dancing to their own tune. 2 days out of the budget, it seems like optimism still seems very alive on the street, even though there's a loss of momentum at higher levels. That's the Nifty in front of you. Started the day negative. finally clawed back and trading with a marginal gain on the index. 24,200 is an important level of support. So while banks are not playing their part, it's IT that's giving the markets its much needed support, and it's been a phenomenal up move on Asian Paints after a gap down. The stock also at its day's high point. So Agam, we've got a bunch of big earnings over the course of the next couple of days. Infosys today, Havells, Polycab to name the other two, and you've got a reaction on Asian Paints where the earning delivery was weak, but brokerages are still constructive, and LTM Mindtree earnings delivery was good, but brokerages are circumspect. So it's an interesting story of two halves.
What's actually playing out in this case is, along with the Nifty, which has in fact recovered from day's lows, Asian Paints has as well. And it's not just on the back of your cash market, but you are looking at big volumes coming through as far as Asian Paints is concerned. We're going to talk about Reliance Industries and HDFC Bank as well, because both these stocks are very, very interestingly poised at the moment. Not just on an intraday basis, once again, mind you, but perhaps on a positional basis over the course of the last few days as to what's happened. It does seem like there's an ever so slight uptick in HDFC Bank, and there's just a little bit more fatigue setting out as far as Reliance is concerned. The question really is that does this mean further consolidation? These are some of the questions that we will ask our experts today. But before that, a quick look at how the futures and options space is panning out today. The Nifty futures at the moment are seeing no change in open interest. Neither is the spot seeing any change. It's marginally in the red, recovered from day's lows. The Bank Nifty pulled that up as well. It is in fact doing well because that's up by as much as 0.25%. With another 8.5% increase in open interest towards what looks like longs at the moment. Now we come to the options market, and in there what we're seeing today is, of course, this is the weekly options expiry. We're starting to see a little bit more traction around the 24,400, 500 and 600 levels coming through. We are seeing significant amount of writing around the 24,600 mark as far as the Nifty is concerned. Where does that leave us with your overall open interest distribution for today's expiry? Well, naturally, 25,000 will see a substantial writing, 25,000 call. It's unlikely that we will see the Nifty go all the way there, because that will entail an up move around 1.5%, which doesn't always happen on the Nifty without any reason or trigger. So that today is a day where we don't have a known trigger. Which is why, except for perhaps earnings,
biggest trigger and the budget.
Right, absolutely. So of course, these are the two. Well, but I'm specifically talking about today on an intraday basis, and of course, you never know. As Samina mentioned, that we can, in fact, potentially, we can't rule it out. But at the moment, the probability is stacking against us conquering 25,000 and. With the Nifty moving up around 1.5%. If that does happen, Samina, I'm sure a lot of bulls will be very happy.
I do think 25,000 may be a little stretched ahead of the budget, but the fact remains, Agam, for the last few days, while the handover from Wall Street, handover from Asia has been weak, earnings some may have not supported, the markets have found every and any reason to actually go up.
That is true.
I mean, look at some of the stocks today. FMCG is your biggest sectoral gainer. It's up 0.6%, despite the fact that Asian Paint numbers were actually weak. So it's very interesting on what's happening. And on Bank Nifty, it's gone through a time correction from the start of July. It was your leader all through June, did exceptionally well. Then you had sporadic earnings from the likes of Bank of Maharashtra that helped Bank Nifty. But let's not forget, it's been in a time-wise correction, and it seems like today could be a day that it's making an attempt at least to get out of that. But we've got with us a whole bunch of stocks that we should talk about. So we'll go across to Nilesh Jain and Bhavin Mehta on their top trades. Nilesh, what's your word on the index? I know most option traders are circumspect or have been circumspect on the Nifty over the last couple of days. But it's been defying all of us and has been moving upward, even though there's a loss of momentum at higher levels and new record highs are coming on very small gains. How do you feel about the Nifty? And do you feel like why don't you start with the Nifty and then we'll talk about Bank Nifty?
Morning, Samina. Morning, Agam. So today, I think in the first, at initial stage, we started on a cautious note, but soon after that, a good recovery we have seen so far. So overall, looking at the overall structure, I think Nifty is very much buy and decline structure. And if at all we see any dip towards 24,500, that can again, that might get bought into, because if you look at the derivative data of today's weekly expiry, that shows that 24,500 is acting as a very crucial and a major support. And from those levels, we have seen a smart recovery as well. On the upside, looking at the territory data of the monthly of an expiry, it looks like the call writers have shifted towards 24,800 to 25,000. So a broader range of 24,500 to 25,000 is very much intact. And I won't be surprised if in the coming week, Nifty moves near about 25,000. That's the next milestone that is on radar as of now. But overall, yes, we are very much on buy on decline sort of a market. If at all we see any dip towards 24,500, that will give a better risk and reward from a taking any long bets at 24,500 sort of levels. At current level, if somebody is already holding the long position can stay put, the structure looks positive.
Bhavin, good morning to you as well. What is your assessment on the Nifty? And I reckon that, we will see some amount of volatility over the course of the next 3.5 sessions all the way till Tuesday. What's the way forward here for the Nifty specifically?
Good morning. Yes, definitely what we are looking at is that Nifty continues to hold on to higher levels. We are not witnessing any major drawdown on the benchmark indices, specifically given the kind of auction data. We believe that lower level of 24,400 to 24,500 continues to remain a good base for Nifty at this point of time. But something interesting that we have been observing over last couple of trading sessions, that is the switch of the sectoral indices. So if you look at something like IT, Pharma, FMCG, they have been performing really well versus that if we look at something like Capgood as an index, we are looking at good amount of drawdown. Even if you look at something like mid cap 100 or a small cap 100, Nifty Next 50 in trade today, we are looking at good amount of selling pressure amongst this particular indices. So while Nifty, because of sectoral churn, continues to hold on to higher level, there is good amount of pain that we are looking at on a broader market index level.
Rajesh, what about Bank Nifty? It's spent the last, Nilesh, I didn't talk to you about Bank Nifty. It's spent the last 2 weeks, going through a time-wise correction. Do you feel like now could be a time to jump on to Bank Nifty, make some longs and then sit tight?
Absolutely right, Samina. So from past 2 to 3 weeks now, we have seen a lot of consolidation in the Bank Nifty and underperformance as well compared to the Nifty index. It is stuck in a very tight range. On the lower side, 52,000 on the closing basis, acting as a very strong support. At the same time, it is not able to cross 53,000. That's the psychological barrier. So looking at the overall setup, overall consolidation, I would say a time-wise consolidation, what we are witnessing right now. So going forward, we might see a breakout above 53,000 that will open upside towards a new record high beyond 53,500 as well. So yes, at current level, from a risk and reward point of view, looks favorable. And given the kind of run-up that we have seen in the Nifty, Bank Nifty has been laggard. So we might see a patch-up rally in the Bank Nifty as well. So yes, it can be bought keeping stop loss below 52,000 on the closing basis. For immediate target on the upside would be 53,000 followed by 53,300.
All right, so that's as far as the Bank Nifty is concerned. Let's also take a Bhavin's view on the Bank Nifty as well. Currently at around 52,500, Bhavin, consolidation on the cards, or do you see a direction here?
Yeah, so overall view is that one should hold on to longs in Bank Nifty with the strict stop loss of 52,000. My sense is that eventually we are moving closer to 53,200 to 53,500 on the upside. This primarily should be led by something on either the corporate lender side. So basically your Axis Bank, SBI, ICICI Bank ideally should continue to outperform versus there could be some amount of selling that we are anticipating for something like Kotak Mahindra Bank, a good amount of selling pressure over last couple of trading sessions. So my sense is they should continue to underperform going forward.
Well, let's go into stocks now. Brajesh, Bhavin, I'll start with you actually. Why don't we start with Asian Paints? Because in pre-open trade, the stock at some point was down 9% and now at its days high where it's marginally lower. At 2955, does it look like a good long trade for the next 1-2 days?
Yeah, so post earnings, we have seen a very strong reaction for Asian Paint in trade. However, my sense is that eventually, if this is able to move past level of 3,000 on upside, post the kind of numbers that it has posted, there is a likelihood that stock will move higher, close to level of 3,200 to 3,250 on upside. And there is a good base formation for this particular counter in the range of 2,800 to 2,900 zone. So my sense is, having said everything, anything beyond 3,000 ideally should be looked as an opportunity to buy.
That's still a big gap, another 50 points. And if 3,000 gets taken out, then it's a buy call from Bhavin. Nilesh, what about you at 29.50? Are you going long on Asian Paints? The reason I ask is because exactly last quarter, the stock on the day of earnings was down 5%, but did a recovery of 10% on the next day. So would you consider going long on Asian Paints at these levels, Nilesh?
Yes, Samina, it's a buy. Reason being, it has been one of the underperformer, and a lot of selling pressure has already been done, and the stock has formed a good base formation near about 2,700 to 2,900 kind of a zone. So looking at today's strong rebound post numbers, I think it also took a very strong support near about its 100-day moving average. So now from here, we expect Asian Paint to gradually inch towards 3,050 or 3,100 kind of levels, although it has immediate resistance of its 200-day moving average that is placed at 2,980. And if it manages to surpass the same, then upside will once again open up for 3,050 to 3,100 on immediate basis. And our position target comes around 3,200 plus. So it's a buy at current level and on decline.
All right, that's as far as Asian Paints concerned. Well, before we move on, I want to very quickly also take a look at all the stocks which are actually buzzing in trade today, and then we can actually take picks from our experts as well. We have India Cement, which has moved out of the F&O ban, and it's actually advancing by around 5.5%, 6%, and we're looking at longs here. I reckon that the traders at this point in time are just taking advantage of the fact that it is in fact moved out of the F&O ban. L&T Tech, on the other hand, is under bit of pressure, of course, reacting we will have earnings from L&T Technologies today. A little later on in the day. Bajaj Auto under pressure, down 3%. ABB India is also down 5%. So these are the two relatively larger companies with significant change in the underlying, which are seeing shorts. What about companies which are seeing unwinding? Let's pull that list up as well. And we are seeing long unwinding for Asian Paints. As I was mentioning earlier, there was a little bit of long build up in Asian Paints. And even though the price may not tell you, the volume certainly could. Give you an idea and give you a picture. So it's essentially that. Even as we see it come off to a certain extent, remember Asian Paints has recovered substantially from the day's low. And besides that, short covering for something like a, pardon me, Berger Paints, JK Cement, as well as something like a City Union Bank. Moving on, let's take a look at what our experts have to say with respect to stocks which are there on the radar. So Bhavin, coming to you. Stocks that look interesting at the moment.
Yeah, so we basically have two trade ideas. Again, one on the buy side, second one on the sell side. So we have been negative on Titan, given the kind of formation on the derivative side. We have seen a very good amount of short built up earlier around level of 3,450, 3,500 kind of range. And the similar kind of setup continues over last couple of trading sessions at around level of 3,300. Good amount of breakdown we have seen on the technical charts. My sense is that stock eventually will move closer to 3,000 level. One should keep a stop loss of 3,350 and look to sell this particular counter. The second stock that we are focusing on is Manappuram, again related to gold. We believe that stock has seen some decent long position, and after a long time, it is able to sustain above level of 210, 220. Good amount of base formation at lower levels, so one could look to long this particular stock with a stop loss of 210 for a possible move towards level of 250 on upside.
Right. Bhavin, that was, of course, two buy calls, two sell calls actually. Titan being a sell call, Manappuram being a buy call. Nilesh, what about you? What are your top stock recommendations this morning, either on the long or short side?
So I have two long ideas, starting with the FMCG space. So this particular sector has witnessed a good momentum of late, and within this space, Tata Consumer is one stock that is looking attractive. A lot of shorts have already been covered, and technically the stock has given a good breakout as well. So given the kind of market volatility, I think the focus is likely to shift towards defensive. So Tata Consumer looks positive for 1220 sort of target on the upside. 1165 should be the stop loss. The other stock that is also on buy side, that is from PSU banking space, State Bank of India. So we are liking the overall PSU banking space as a whole. State Bank of India continues to remain our preferred bet. So upside seems to be open for 915. So that's the new record high, quite possible in State Bank of India from here. Stop loss can be placed below 877. So these are the two long ideas.
Okay, I'm going to very quickly take a view on Reliance Industries from Bhavin and HDFC Bank from Nilesh. So Bhavin, quite quickly, Reliance Industries, what's the way forward here? How are you reading things here?
Yeah, so what we have seen for Reliance Industry is good amount of call writing around 3200 strike. My sense is that till the time stock is not able to cross this particular level, we are likely to see a probable move towards the level of 3050 on the downside. So my sense is that those who are already long in the stock, if it moves once again closer to 3200, could look to book part profit. At the same time, anything below 3050, I'm not sensing any major drawdown for the stock. So anything below 3050 should be looked as a buying opportunity. So the range largely remains between 3050 on the downside to 3200 on the upside.
And Nilesh, HDFC Bank?
Yes, Agam. So we have already seen quite a bit of run up from 1425 to almost 1794. So we have seen a good retracement of 50% towards the levels of 1610. So that's the immediate support level for HDFC Bank now. So what we are expecting here is sort of a consolidation. And once this consolidation gets over, we can expect another leg on the upside towards 1700 plus. So it's a positional buy. From trading point of view, there may be possibility of some consolidation to continue, but it's a good buy at current level. And if we see any dip towards 1600 or below that, that can be used as a buying opportunity, keeping stop loss below 1570. Upside target would be 1650 on immediate basis, and positional target comes around 1700 plus.
Right. Thank you, Bhavin and Nilesh, for joining us today and sharing with our viewers top trading strategies. We'll quickly move on to commodities. Vandana Bharti, SMC Global Securities, joins in with her top trades. Vandana, let's start with gold. What's the strategy on gold with an impending rate cut in the US? Usually means good news for a commodity like gold and silver.
Yeah, I agree. We have seen 4-week rally in gold prices, and it started near 2290 and now it made a new high of 2488 yesterday. But yes, correction is on the way. Before taking new leg of rally in September, we can see some kind of correction in gold prices. And today we expect that the prices should continue the correction of yesterday. So I'm still in this commodity. We should go for sell near the level of 74,350. The target would be of 74,000. And the stop loss we should put of 74,500. On comics, I'm expecting a fall of around $20 in gold, and it should be off near $2250, $2450. On MCX, I'm expecting that this commodity should take a correction near the level of 73,200 in near term.
Okay. Vandana, what about crude? How are you analyzing this specific commodity?
We have seen drop down in inventories in US, and this is travel heavy summer season for crude oil. And on every day, we are expecting a buy in this commodity. So here, the rally should continue up to the level of $85 in WTI. In terms of Brent crude oil, we can see an upside move of $2 to $3 here. On MCX, it should reflect near the level of 7,000 to 7,100. So in today's trading session, we should go for buy near the level of 68.50. This is August contract, and the target should be of 6,900. We should place a stop loss of 68.25. Even in positional call, we should go for buy near the level for the target of, say, 7,100 in crude oil.
Vandana, Chinese GDP data last week was very disappointing, and that doesn't garner well for commodities or industrial metals at least. And I believe you've got a sell call on copper. You want to elaborate through that strategy?
Yeah, of course. The real estate sector, it has witnessed a downturn from last 12 months, I suppose, and it's a very bearish news for copper. And they are not importing; they are only exporting. So again, it's a bearish signal for this commodity. And we have seen a fall of around 150 rupees on COMEX on copper. The sell call should continue here, and on MCX we should go for sell near the level of 839 with the stop loss of 841 for the target of 833 here. I'm expecting that this commodity in short to mid-term touch the downside level of 780 to 800, and one should go for sell position on every high.
All right. Vandana, I believe that we missed out on asking you about silver as well. Do you expect it to move in tandem with gold?
Yeah, it's very volatile, and it has given a clear sell signal for this week. And yesterday we have seen a sharp fall here, and the sharp fall should continue because the rally is overstretched, overheated here. And in this commodity, one should go for a sell near the level of 92,200 with the stop loss of 92,600. I'm expecting a fall of around 800-900 point in this commodity, and the target should be of 91,350. So on COMEX, I'm expecting a fall of around 50-60 cents, and it should take support near the level of $29.5, and the resistance is again near the $32.
Thank you very much, Vandana, for joining us today on the show. Those are a couple of trading calls coming in on crude, gold, silver and copper. In the meantime, the markets are trading in positive territory. The Nifty 500, those down 0.6%. The big reactions really are backed by earnings. You've got 37 companies that report earnings today, amongst the likes of Infosys, Havells and Polycab. Well, like I said, it's all about earnings reaction across the Nifty 500. Just Dial is your top gainer, up 17% on a set of good numbers. Tata Tele is up 7%. India Cements goes out of the F&O space, so trades with a gain of 5.5%. LTI Mindtree on better than expected earnings being reported, trades with a 4% gain. Asian Paints, disappointing earnings, but brokerages seem constructive. The stock has recovered well from its day's low point, pretty much holding on to its day's high as we see it. KEC International on back of an order win is up 3.5%. Alok Textiles reacting to earnings, amongst others. Well, on the sell side, you've got a whole bunch of counters that are under pressure. Z Entertainment once again having it rough, trading with an 8% cut. Elecon Engineering, weak earnings, the stock has done 7%. And Dixon going into the budget with a 6% cut as we see it. Well, with that, we're completely out of time. Thanks for watching. A lot more programming on the other side, so keep it with the channel.
Hello and welcome. You're watching the Small and Mid Cap Show. I'm Mahima Vajrajani and with me is Anushi Vakharia. Where before we move on to the managements that we're going to speak to today, that is EMS Limited and Elecon Engineering, let's take a quick check on how the markets are panning out to be at present. Well, in terms of the benchmark indices, Nifty 50 is trading within a tight range of roughly 160 points. Currently 35 odd points away from its day's highs, down around 0.09%. Sensex is also trading in a range of roughly 500 points. Roughly 80 points away from its day's highs, down around 0.05%. But it's interesting to see the broader markets under pressure today, where the mid-cap 150 is down around 1.4% and the small cap 250 as well under pressure, down around 1.4% as well. In terms of the contributors to the Nifty, let's quickly pull up what's weighing down and weighing up the Nifty. Well, something that's weighing down the Nifty is Reliance, HDFC Bank, Bajaj Auto and L&T. And something that's weighing up the Nifty today is a couple of FMCG and IT names, TCS, HUL, Infosys and ITC. Let's also take a quick look on the advanced decline. The breadth of the market is skewed towards the sellers today, of course. The advanced decline ratio is roughly 1:3, where around 1,500 declines versus 500 advances. Well, let's also take a quick look at what Just Dial is doing. The stock is on a tear post its Q1 FY25 results. Revenue was up 4% roughly, EBITDA up 14%, and margins have improved by 200 basis points and net profit up around 22%. The stock on a tear as we speak, up 17%. Let's also quickly pull up what Alok Industries is doing. All of these stocks are buzzing on the back of the results today. The stock is under pressure, down around 4%. Revenue was down around 29% for the company. EBITDA was up, however, 68%. However, there was a net loss of 207 crore versus net loss of 2 to 6 crores. Let's also quickly pull up what Elecon Engineering is doing. The revenue was down 10% for the company. EBITDA was down 16%. Margins were down 200 basis points, and net profit was down roughly 10%. The stock is under pressure, down around 6%. Let's also quickly pull up something like Hindustan Zinc. More dividends for Hindustan Zinc shareholders. The NCLT Jaipur sanctions has confirmed scheme of arrangement between company and shareholders. The NCLT approval allows company to transfer funds from general reserve to retained earnings, which can be used for further distribution of dividends. The stock is under pressure. It's down around roughly 2%. Let's also quickly pull up KEC International. It's received new orders of roughly 1,100 crores. There you go. The stock is up around 2%. But, one stock that is in focus today on the small and mid cap show is EMS Limited. It's gotten a letter of acceptance of 141 crore for a project from Uttarakhand Power Corp. And to discuss more about this and the company's future outlook, we're joined by Mr. Ashish Tomar, MD at EMS Limited. Welcome to the show, sir. My first question to you is that this particular letter of acceptance that you've received of 141 crore, give us a brief as to, what is the execution order, execution timeline for the particular order, and are the margins in the similar range for this project as well?
Yeah, good morning, Ahmed. Thank you for having me. Yeah, I think the margins would be in the similar range for this project, and the timeline for completion is around that project needs to be completed in 2 years from date of award.
All right, so 2 years is the execution period. Hi, Anushi joining in here. So my next question is about the order book size. I want to understand what is your current order book size at, and what is the kind of order inflow growth that we expect for FY25?
Yeah, good morning. Thank you. Our current order book stands at around 1,600 crores, and we expect a good inflow of orders coming on, because there was some stagnation due to the ongoing central elections. The project evaluations and award work was on hold by the government department.